on. So the experts coming up next. Gina Martin-Adams, Chief Equity Strategist over at Bloomberg Intelligence, will be joining us. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker at the Bloomberg News. With this Bloomberg Business Flash, inflation cooling in June, third straight month this has happened. So this is a sign that the worst price spike in 4 decades steadily fading could soon usher in interest rate cuts from the Federal Reserve. The betting now pretty much even odds for September. Also on the data front, the total number of workers collecting unemployment benefits holding near a 3-year high, a sign it's getting tougher to find a job. Now, right now, stocks that tend to benefit the most from easier interest rates leading the way, home builders, real estate owners, and smaller companies that have been lagging behind the market's big boys for a while, also strong. Russell 2000, that's really the standout today. Russell 2000, the smaller cap stocks, that is up 2.7% right now. And S&P 500, that's 21 points lower. This has been fluctuating in and out of gains. It is down 0.4%, 56.12 on the index after yesterday's record close. The Nasdaq Composite Index, 175 points lower, and that's down almost a full percentage point. The Dow right now up 61 points, and that is a rise of 0.2%. Two-year yield, 12 basis points lower. That is at 450, 4.5%. The 10-year yield, 10 basis points lower, and that is at 4.17%. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash. Paul, Alex.
Thank you. Thank you, John Tucker. We appreciate that. So we were talking to Emily Rowland about earnings, et cetera, and the consensus is for earnings growth of about 8%. Pretty high forecast. Well, Gina Martin Adams of Bloomberg Intelligence came out with her forecast a couple days ago, and they see more than 12%, well, 12% earnings growth, I shouldn't say more than, 12% earnings growth to an already high bar. This struck me as really interesting. Gina has been so on the mark, so we wanted to get her take. Gina Martin Adams, a chief equity strategist at Bloomberg Intelligence. Most people are freaked out about 8%. You see 12. Why?
Well, it's just one model, Alex, so I do have to caveat with that, but our guidance model actually has given us pretty good estimation of what to expect for earnings growth over the last several quarters. For a third consecutive quarter, it is above analyst expectations. It does suggest that when we look at the 120 some odd companies that have given us guidance, their numbers would imply for the S&P 500 at large, we could see as much as 12%. Now, I will say we have to caveat this quite a bit. It is just guidance from companies that we're using. It is just 120 companies, but the model's been pretty spot on. The last several quarters, it has suggested that analysts are still far too pessimistic. I think the keys to this quarter are really going to be, can tech really sustain high growth rates because tech expectations are continuing to go higher? And outside of tech, can we finally see some recovery emerge? This is a space that we've seen negative EPS year over year for several consecutive quarters. So we need to see that sort of 493 or the ex-tech growth really take off to get to 12%.
What's driving earnings in corporate America these days, Gina? Is it top line growth? Is it cost cutting on the margin side? What are we seeing?
It's a combination of both. Top line's been a little bit slower than I think many had hoped for. Top line growth has just been kind of stable around 4 to 6% and is expected to remain there. So we're not likely to see a big top line beat, with the exception of maybe tech, where there does appear to be some pretty consistent revenue growth drivers emerging related to AI, especially. But outside of that, it really has been more about margins than anything else. Margin expansion has powered the vast majority of the recovery since the early part of 2023. This is really consistent with the idea that inflation peaked back at the end of 2022 and early 2023, and that deceleration in inflation has allowed for margin expansion to permeate most of the S&P 500. We're going to see for the second consecutive quarter net income and operating margin expansion on a year-over-year basis. So that is certainly embedded in consensus expectations. That would be a very good thing for stocks. If we can get that to be broader and extend beyond tech, media, telecom into much of the rest of the S&P, it could power a significant degree of optimism for the index.
So then I'm curious as to how the CPI today is registering for you when it comes to margins. Because on one side, right, if you're seeing inflation continue to roll over, yay for margins. But clearly, if you look at Pepsi and Conagra, we have lost pricing power with a lot of these companies. Costco maybe is an outlier because they didn't raise prices for so long. So where are companies in the middle of that?
Yeah, I think it's a great question, and it's something the market doesn't necessarily digest immediately after CPI prints. The gut reaction to CPI is always about the Fed. It's always about what's the Fed going to do? What are we going to get in terms of valuation potential boost? Are we going to finally see that ease result in some improving risk tolerance, right? But when you really look at the impacts of inflation, it's ultimately very important to consider the difference between CPI and PPI. So the quick answer to your question is, sure, decelerating inflation is okay as long as that deceleration in CPI or consumer prices is also occurring in producer prices. If we keep seeing the PPI prints decelerate in line with the CPI deceleration, then it does suggest a degree of pricing power. But you're absolutely right. PPI has been somewhat sticky recently as CPI decelerates. If you get to a point where producer prices are rising at a faster pace than consumer prices, then we might reach a point of maximum margin expansion for some of the more goods-centric companies. In that instance, we definitely need to see revenue growth improving to make up for that margin differential. This could be a turning point for us in the second half of this year because we've had this wonderful inflationary downdraft where CPI has been falling, but and PPI has been falling faster for most of the last year or so. We might be at that critical inflection point now, and it's definitely something to watch.
All right, dumb question of the day. If I pull out the Magnificent Seven, is the rest of the S&P 500, are earnings growing there?
They haven't been, Paul. They should in the second quarter, according to analyst expectations. The 493 should put up 5% earnings growth in the second quarter. This will be the first point of earnings growth since 2022 for this group. So it would be the first time we start to see some earnings recovery. I do think part of this is just easy comps. When you look at the second quarter of last year and into the end of last year, this group was posting pretty significant declines, mostly due to energy, materials, and healthcare segments, which were posting extreme declines in earnings on a year-over-year basis. So those easy comparisons should make for some growth coming out of this group. I think it's really important, though, to watch for financials and industrials. Financials, we've started to see some recovery as the yield curve has passed its maximum inversion point, but industrials is still struggling. So it could be somewhat mixed results in this group, but easy comps should make for some growth finally emerging out of the 493.
But flip it, and it feels like tech is up against some really tough comps.
Yeah, I think that's a great point as well. Tech is not only up against tough comps, but they're up against increasing expectations. So this is something really unique where the broader S&P 500 is sort of shown a stall in revisions, a stall in expectations for growth, some even downward adjustments into those expectations for growth. Tech adjustments are only going higher. So analysts have been marking up expectations for tech stocks growth, really in line with the fact that over the last 2 quarters, they were far too pessimistic and the tech companies just beat those expectations. But nonetheless, those expectations are rising. So when you look at the Mag 7 specifically, their growth rate is still anticipated to be about 30%. Then tech at large is expected to post some pretty hefty earnings growth. So they do face tougher competition or tougher expectations at the very least in an environment where their comparisons are only getting tougher. Remember, tech at this point last year was starting to experience double-digit earnings growth. So the comps are tougher and expectations are rising.
How about valuation here, Gina? Do we need earnings to be really good to support this market, or coming in line with consensus, is that enough? I'm thinking actually mostly about tech. I worry about the day that we get a less than wow guidance from one of these big tech names, and that might just take the whole ship down.
Yeah, I think you're right to worry. Tech is the only space that shows really extreme valuation multiples relative to long-term history. The rest of the index is actually trading at reasonable, close to average, or even beneath average, long-term average multiples. So the rest of the index, there doesn't appear to be a whole lot of expectation. If we do miss, or if it's a mixed result, that does appear to be in the price, whereas tech does face not only high expectations for growth, but embedded high expectations in terms of price. So it's not just the consensus that's telling us to expect great numbers. It is also the price of stocks that is implying very high expectations with double-digit, valuation levels or 20% plus multiples. Also close to 2 standard deviation multiples above long-term average with respect to tech. So this is a space where valuation multiples are very high. This means that not only do tech companies need to beat those expectations for the quarter, that they probably also need to continue to guide for better growth going forward. And that could be a tough bar. Now, that said, the last 2 quarters, that's exactly what they've done. They've beat expectations. They've also guided higher. They even started to deploy capital at a faster pace than analysts were anticipating. But that bar is getting ever higher. They will have to do so again amidst much higher expectations this time around.
All right, Gina, thanks so much. You're the best. Really appreciate Gina Martin Adams joining us, Chief Equity Strategist over at Bloomberg Intelligence. And the calls of cuts coming in, Paul. JP Morgan moving its Fed rate cut call to September.
Really?
From November.
All right, that's cool.
Market's pricing, I think, like 2.4 now for the year. We see if we can hold on to that. But, it's
And as
it's
Ira Jersey pointed out, he said, based upon today, that makes sense. But we've got a lot of data between now and September. So, again, based upon this softer than expected print today, sure, that makes sense. But we got a lot more to go before we get to September.
Slow your roll. Slow your roll is what he's saying.
I'm concerned about September and October in this market. I'm calling it right now because these valuations are so rich. It just takes one kind of less than stellar print, and then I just feel like there's that, because everybody's waiting for that pullback in the market, something more than 3 or 4%.
But if we get a cut in September, does that help support a market and buying the dip instead of getting that 10%?
I think on the cuts, it's buy the rumor, sell the news. So it's already in the market. So anyway.
All right, that's our take. Michael Barr here with World and National News. Michael.
Thank you very much, Alex, Paul, John. President Joe Biden is facing mounting opposition within his own party as a Senate Democrat joined a growing number of House lawmakers in calling on him to step aside. Vermont Democrat Peter Welch became the first sitting senator to directly endorse replacing the 81-year-old president. Biden's rough debate performance has raised concerns about his mental acuity and thrown his re-election bid into turmoil. We get more with Terry Haynes, founder of Pangea Policy.
Biden's certainly under some pressure from the party, but is he feeling a lot of pressure today? I doubt it. I mean, I'm sure they're all on full alert and all that, but I doubt he's feeling a lot of pressure from one senator and a handful of House members saying that he should go.
Terry Haynes of Pangea Policy. Energy Secretary Jennifer Granholm is expected to visit an auto manufacturing plant in Ohio today. The Energy Department has chosen plants in 8 states to receive federal funding to help drive electric vehicle manufacturing to new levels. The Biden administration says the plan would also create more union jobs and tackle climate change. A Texas-based company called American Rounds has installed vending machines that sell ammunition in grocery stores in Alabama, Oklahoma, and Texas, raising concerns among gun control advocates. The company says the machines use an identification scanner and facial recognition software to verify age. American Rounds CEO Grant Magers.
We really value safety, security, and convenience for the customers, and we really hope we can help build a better community as it relates to the purchasing of ammunition.
Magers says about 200 grocery stores want to install the machine. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr. This is Bloomberg. markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker, the Bloomberg Newsroom with this Bloomberg Business Flash. Let's start with Treasury yields. They're falling. Fed swaps projecting more easing this year, almost fully pricing in a September rate reduction. All comes after the data this morning. Core Consumer Price Index climbing 0.1%. That is actually the smallest advance since August of 2021. Year-over-year measure rose 3.3%, also the slowest pace more than 3 years. Interest rate sensitive stocks right now, they are moving. We have real estate. That is the best performing group right now in the S&P 500. And yes, earnings season underway. Delta Airlines shares sliding. The world's, after the carrier's third quarter adjusted earnings per share forecast missing estimates. And apparently consumers also cutting back on snacks. PepsiCo reporting weaker than expected revenue growth in the snack food business, hurt by increasingly budget-focused shoppers. S&P 500 right now 19 points lower. That's down 0.3% at 56.15 on the index after a record close yesterday. Dow Jones Industrial Average 23 points higher, 39,740 on the index, and the Nasdaq 100 down 213 points. That's a decline of 1%. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash. Paul and Alex.
All right, John Tucker, thank you so much. We appreciate that. Alex Steele, Paul Sweeney live here on the Bloomberg Interactive Brokers Studio, streaming live on YouTube as well. So head over to youtube.com and search Bloomberg.com. My first trade on Wall Street, Johnny Coughlin leans over to me, my head trader, block desk at Payne Weber. Buy 300,000 shares of Pan Am at 31.5 and do not lose money. I'll give you all day to do it. I did. I made about $4,000. It took me almost the entire day to get this trade done. 6 months later, I did it in 10 minutes. But
amazing.
Anywho, that's my heritage on the block trading desk, trading equities. But now Sri Nanarajan, who covers all of Wall Street for us, has got a story that I don't like because it's got Citadel Securities crafts a plan to shake up banks' trading desks. I like the trading desk. Are they being disintermediated to some degree?
A very good morning to you as well, Paul.
He likes you, just not the sheets, just to be clear.
No, but that's a word we do not use in the story, but in some ways that's a good way to think about it. The difference between when you were at Payne Weber and now is the industry model has changed dramatically.
Yep.
A lot of trading products, especially ones where you've seen that embrace of electronification, it's just not easy to make a lot of money in that business. I go back to this famous Bear Stearns trader who was known as Two Sticks Eddie. He got that name only because he would buy something at 97, sell it at 99, always had that 2-point spread. That's not what's available. Now it's the technology, the process, the execution, it's the plumbing of the system has changed. It's not so much driven by relationships. And that has allowed these players, these market makers on the edges of that trading ecosystem to come in and really take market share. That's where you've seen people like Citadel and Jane Street and Virtue actually starting to gain share. They're still not as big as the biggest players, but where they do have an advantage is because the trading landscape has changed, because so many of the products are becoming categories of one or two. You're one or two top players in that space, and outside of that competitive mode, everyone else is struggling. Everyone has to identify their niche. And that is where someone like a SitSec can come in and say, our niche is great technology, great analytics, great ability to execute and process. Why don't we go to some of these struggling banks, people who need to offer these services but can't really afford to offer these services, the tier 2, the tier 3 banks, the brokerages, and tell them, we will do it for you. We will be your engine. Just slap your name on it. Tell the clients you're still doing it, but split your commission with us. Your costs go way down, and you will show a better return on equity, which at the end of the day is the most important thing all of them are striving for.
Okay, here's my super dumbed down question. So if that happens, what would Paul's trade of Pan Am back in the day look like? How would that now be different?
It's just that Paul wouldn't be doing it. He will be sending it off into the pipes and someone else will be doing it for him.
He just puts in like an order and then it just goes and happens and he has nothing. He doesn't have to sit there all day and manage it because Citadel is working on the pipes.
It's not like client ABC comes to Paul and says, hey, here's the deal. He takes it from him and then flips it around to XYZ and makes the spread. It's just become harder, especially in equities. Even in other products that you would not have previously thought about as low touch, they are becoming low touch. Think about corners of the credit market that you would not have thought would be easy to electronify. But that's happening, and that's happening at pace. But the bigger, I guess, academic question here is, if you're a client, and the simple way to think about it is, it's like if there were some banks, if there were some tier 2 banks that were to embrace this model, and you're a client going to them, it's almost like a Starbucks selling Dunkin' Donuts coffee. How long does a client keep going to Starbucks to buy that Dunkin' coffee instead of going to Dunkin' directly? And that's Citadel's opportunity, because it is also doing that. It has also got a platform where clients come straight to them. But it's not all going to happen at once. That intermediate term can last a while. So if this plan, which is still, let's be clear, a bit pie in the sky, but if they're able to roll this out, and if they're able to get people to embrace this, that intermediate term can last a while, and that could enable Citadel Securities to make a bigger leap in the business quicker than otherwise. And that's important because this trading firm of Ken Griffin's it's clear to us, it's clear to a lot of people in the market that in the coming years, it will IPO. And it is going to have a pretty valuation because it is completely focused on having high ROE, low capital intensive businesses, because they are convinced that's what investors and analysts like, and their entire model is around taking that piece of it and scaling it.
Does Citadel's trading operation, third-party trading operation, do they put up capital to facilitate trades, or they just do it with flow? Because, I mean, part of the reasons that people would pick up the phone and call me back in the day is that I would put up some capital to facilitate a trade, put capital at risk to facilitate a trade. Now, that first day, I wasn't allowed to put up any capital because I would probably have lost it. But that's kind of how it goes. Are they putting up capital?
They do. I mean, and again, we'll have to go through the numbers, but there are some disclosures. I believe the Citadel Securities capital is somewhere close to 8, 9, 10 billion. Jane Street is perhaps double of that. The big banks are probably 8, 9 times that. So yes, you can't play this game without any capital. It's not as intensive as the bigger operations because they're not doing some of the harder stuff. They're not doing some of the prime brokerage stuff, which is the financing business, where a lot of the capital intensity comes into play. And that is by design. They're saying, we don't want to chase that capital intensive stuff. We don't want the regulators to be breathing down our necks. We will do the stuff which requires efficient use of operating expenses, up-to-date, new age tech stack, which is very different from a lot of these other older players who are struggling with creaking technology, burgeoning operating expenses, and not cutting-edge analytics. Citadel believes it has all of that, and that is what gives it that agility and nimbleness, at least that's how they see it, to go in there and offer a service like this and also outcompete some of their bigger rivals.
So who would this be bad for?
We know who it will be good for.
Okay.
Citadel Securities. Who will it be bad for?
Yeah,
the way they are making the pitch is they're going to all of these, or they will go to all of these tier 2 players and below and say, it's not bad for you. It's mutually beneficial. If we weren't there, you would be having serious conversations with your board about what products do you need to exit. Because some products just don't make money, and you can't just carry along that dead weight forever.
But in theory, those tier 2 companies then will be losing some of their...
They will be losing some of their... They will be losing some of their sway. They will be losing some of their commission. In exchange, they get higher profitability. So they have to figure out if that trade-off is worth it.
I think one of the concerns I would have if I were a Deutsche Bank, I know it was mentioned in your story, do I want to give up, A, the commissions, and B, my relationships? Because I think the market's going to know that I'm not really in the game and allocating capital and all that kind of stuff. And what does that mean for my clients if I'm not in there? I'm farming out a lot of this capital risk and so on and execution costs to Citadel.
Hence, why not just go right to Dunkin' Donuts and bypass Starbucks?
Yeah, so I'm sure they're going to have to think about that. But for a lot of the second-tier terms, it might make a lot of sense.
Right, and even Deutsche Bank, which I would not necessarily consider inside the competitive mode of, I mean, they exited large parts of equity trading, who are not going to be a part of this process. They're not going to Goldman Sachs and JP Morgan and Morgan Stanley and say, we're going to supplant you, right? Because those three are squarely inside that competitive mode. It's when you step outside of that area that it becomes extremely challenging.
All right, Sri, thanks. Good stuff. Sri Nanarajan, senior finance reporter, Bloomberg News. He's got a story I don't particularly care for, but I do understand it. It makes some sense. We'll see if our good friends at Citadel can float that down the street here. S&P 500 off 21 points. This is Bloomberg.
company news headlines on Bloomberg Radio.
And I'm John Tucker in the newsroom. Look at some of the company stories we're following. Let's start with this. Apple, the biggest new product in years, not expected to shake off its slow sales start until the release of a cheaper model next year. This is the $3,500 Vision Pro mixed reality headset. Has yet to sell 100,000 units in a quarter since its launch in February. And it faces a 75% drop in domestic sales in the current quarter. At least this is according to the market tracker IDC. The international launch at the end of June, that's going to offset some of the weakness in the U.S. A more affordable edition, which IDC estimates will cost roughly half as much, should rekindle interest in 2025. Brain computer startup Neuralink aims to implant its device into a second human patient in about a week or so. This is according to Elon Musk. He said all this during a video update yesterday. He hopes to have the devices in patients numbering in the high single digits by the end of the year. A pretty wide-ranging discussion that was broadcast on X yesterday. The billionaire, several key Neuralink staffers described the current device's capabilities and future possibilities, which they say includes repairing paralysis and memory loss. They also have outlined steps the team would take in future surgeries to avoid some of the setbacks that occurred in the wake of the first implantation. And Donald Trump speaking at a Bitcoin conference this month. This, according to the event organizers, an address that will highlight his growing embrace of the cryptocurrency industry. Bitcoin, by the way, since its high on March 14th, it's down about 23%. And that is your company news.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
Happy Thursday, everybody. I'm Alex Steele with Paul Sweeney, Bloomberg Intelligence Radio. We bring you all the top news in business and finance and economics through our lens of our Bloomberg Intelligence analysts. They cover 2,000 companies and 130 industries worldwide. We also keep you up to date on world and national news, and for that, we go to Michael Barr. Michael.
Alex, Paul, John, thank you kindly. President Joe Biden has a press conference scheduled for later today to close out the NATO summit. It will offer him a fresh opportunity to try to prove to the American public that he is capable of serving another 4 years. We get more with Bloomberg's Josh Wingrove.
All eyes are on this press conference. If it goes badly, then I think we'll see more momentum towards the question of whether he should be the nominee. If it goes well, maybe they can, put the cat in the bag again.
Bloomberg's Josh Wingrove. President Biden's news conference is scheduled for 6:30 p.m. Wall Street time, and we will carry it live. Last night, during his dinner toast, President Biden touted the alliance and a common belief in dignity, democracy, and freedom.
To NATO and to our neighborhood of nations, may we continue to grow stronger and closer in all the years ahead.
The dinner honoring the 75th anniversary of the Defense Alliance. Moscow says the Kremlin has an angry reaction to NATO's announcement that Ukraine is on an irreversible path to membership in the Western Alliance. Kremlin spokesperson Dmitry Peskov said that Russia's opponents in Europe and America did not support dialogue or peace. Peskov said Moscow would respond with coordinated measures to keep NATO in check. Finally, a woman who made a public political statement for all to see has won a court battle. A federal judge in Tennessee says it was unconstitutional for the city of Lakeland to fine Julie Pereira for a profane yard sign that targeted both President Biden and Donald Trump.
Within a couple of days, I had a notification from the city that my political sign with some vulgarity or some profanity on it was in violation of the city of Lakeland's sign ordinance.
The sign had the word fudge, only it wasn't fudge. It was the word, the F -- word. As part of the ruling, the city will have to repay hundreds in collected fines and thousands in legal fees. Global news 24 hours a day and whenever you want it. With Bloomberg News Now, I'm Michael Barr, and this is Bloomberg. Paul, Alex, John.
All right, thanks so much, Michael Barr. So it is the time of year or month where we get the Subdial Watch Index. So this basically tracks the 50 most traded watches by transaction value. And we like it because it's sort of that secondary market was so hot right around the pandemic. It felt like everyone was buying these watches. Prices went sky high. But now, again, it's turning. Fallen 8% in a year, down 23% in the past 2 years, and it declined a little less than 1% in June. And the funny thing is, there's a great chart in this piece by Andy Hoffman. If you look at the Bloomberg Subdial Watch Index versus the S&P, they're like exactly the opposite.
Yep.
So as watch prices fall, the S&P goes up. And I'm not saying it's a correlation causation situation, but like, why buy a watch when I can go buy NVIDIA?
Yeah, exactly. It's a thing. I mean, people buy these for investments, and you know, there's so many different levels of watches that you can buy. The super luxurious, you know, then the next one down might be like a Rolex, an Omega. I have an Omega, but yeah, the prices, they really hold their value by and large.
The one that really holds their value right now over the last 12 months is Cartier. So the Cartier index prices are up almost 2%. What really didn't hold their own? Patek Philippe.
Oh.
Patek Philippe.
You know.
It's a marvel of engineering.
Okay,
really,
but
all
those
these watches.
prices on the secondary market were down over 7%.
Well, here's the scam. On my Omega, the little plastic that would be the 7 number. It's a little piece of plastic. It just fell off. The glue fell off. I take it into the Omega store. They send it back to Geneva.
What?
To get it fixed. 4 months and $1,000. It is a scam. You can't bring watchmakers over here to New York?
That's actually watchmaking.
I know.
This is a bigger story. All right, coming up in the next hour, we'll talk more about the markets and talk about Delta with George Ferguson.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney.
The real outperformance has been the U.S. corporate high yield.
Are the companies lean enough? Have they trimmed all the fat?
The semiconductor business is a really cyclical business.
Breaking market headlines and corporate news from across the globe.
Do investors like the M&A that we've seen?
These are two big-time blue-chip companies.
The window between the peak and cut changing super fast.
Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
All right, coming up in this hour, we're going to check in with Lindsay Piegza, chief economist at Stifel, get her call on that CPI frame. We're also going to speak with Stephen Jacobs, president of 10X, on the state of commercial real estate. How good, how bad, how tough is it? We'll get the latest there. And then George Ferguson, he's Bloomberg Intelligence, covers the airlines. We're going to get the latest on Delta. I thought that Delta news would have been a good quarter. It was not. We'll get the reasons why from George Ferguson. But right now, let's go to Charlie Pellet and get a Bloomberg Business Flash.
Thank you very much. And here's what's going on. We do have U.S. stocks trading mixed right now. The Dow surging by 106 points. That is a gain right now of about 0.3%. But the S&P NASDAQ, they are both in the red, looking at a 31-point drop right now on the S&P, holding above 5,600. 5,602 is where the S&P is, down by about 0.5%. NASDAQ Composite Index, so down 234 points, a decline right now of just about 1.2%. 10-year, 4.17%. The 2-year, 4.50%. Spot gold is surging $44 the ounce, up 1.9%, now at $24.16 on the precious metal, while West Texas Intermediate crude oil is up 0.5%, $82.42 for a barrel of WTI. Bottom line here, U.S. stocks trading mixed after this morning's CPI report. Reaction to the CPI data from former Fed Governor Randy Kroszner, now a professor of economics at the Chicago Booth School.
They will say that we have the foundation for a cut, but they're not going to be ready to go yet. So I think they're going to, as Jay has said over and over again, he needs more data to feel confident that inflation is coming down in a sustained and sustainable way. This is certainly consistent with that. This is not enough to get them to move at the end of this month.
Former Fed Governor Randy Kroszner. We've got Delta Airlines shares now lower by 5.9%. Delta saying this morning it does expect profit this quarter to fall short of Wall Street's expectations as heavy competition in the domestic market drives ticket prices down. Yes, we'll be hearing from our George Ferguson coming up on Bloomberg Intelligence. Bottom line here, U.S. equities mixed, lower on the S&P right now, retreating from a record down 29, a drop there of 0.5%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you so much. Alex Steele here, alongside Paul Sweeney, Bloomberg Intelligence Radio. Happy Thursday, everybody. Happy Friday to Paul. S&P down by about 0.5% despite those slowing CPI numbers. And as Charlie was just pointing out, there's lots of fun stuff under the hood, which is why we're seeing the S&P trade so heavy. And a huge part of that is going to be airlines. So luckily, Norma Linda is joining us from Bloomberg News. It just kind of shows like how the punishment's going to go, I think, a little bit in earnings season.
Most definitely, especially as you said, as we are heading into earnings season, everyone's wondering how critical people will really be on a lot of these companies. And as we're looking at the downward side of the S&P 500, we're seeing a lot of these airline companies sitting there, and that's all because of those earnings that we heard from Delta, where it missed expectations, essentially slashing its summer fares. And so a lot of investors were really looking to see some pricing power there. And as we're heading into the summer months, it seems as though Delta has not been able to deliver. Actually, the CEO said that excess supply has led to heavy discounting. Like everyone, you get impacted.
I can't remember the last time I was on a flight when I had an empty seat next to me. Packed to the gills.
Yeah.
Offering money for people to bump off the flight.
Oh my God,
right.
Yeah. There was like 15 people once that they had to get off a flight. I was like, oh, goodness.
My goodness.
That defies the conversation about capacity, because at the heart of it is overcapacity, not enough demand, therefore thus. But I'm just not, do we know when that resolves? Are we hearing that at all yet?
I mean, I think that people are really trying to parse what is coming out of all these other companies to follow. I mean, we're seeing American down, we're seeing United down as well. So we're seeing a lot of investors trading, ditching these shares as these shares, the companies trade lower in sympathy. But we did have TD Cowen saying that this will likely raise concerns about the industry's health moving forward, especially as we're seeing more pressure for discount carriers to reduce capacity. So to that point about capacity, it seems as though we are looking to see how they'll be able to figure this out moving forward.
All right, we'll check in with George Ferguson. We'll grill him on that.
Yeah, we're going to do that.
All right. You know what I really want to talk about? Let's talk about real estate stocks. Who doesn't? Let's go.
See, I'm always ready for this one. So we're looking at real estate stocks because they are the best performing sector in the S&P 500. This is coming after that CPI data report that we got today. It was cooler than expected, and we are seeing a bit of some relief as it pertains to rent, as we're looking on the housing side here. And as we're really parsing through that monthly report, analysts are seeing a lot of positivity for these real estate names, especially as we're looking toward potentially September for that first rate cut that we're expecting from the Federal Reserve. But we are seeing a lot of digital names. We're seeing commercial real estate rallying, housing, just across the gamut here. You're seeing real estate strength this morning, and it is seeing its best day of the year. That sector is up
And we are
today.
going to talk coming up later this half hour, Stephen Jacobs, president of 10X, on the state of CRE.
Nice deep tease. We like that. All right, and then let's wrap it up here, and this will pair nicely with our inflation conversation. Costco. So when I had the headline that they're hiking annual membership fees, I was like, oh God, here we go. This is the price spiral has not been done yet. But then I was interested to read that they hadn't raised prices since 2017.
Exactly. 2017 was the last time that they've done this. And actually, D.A. Davidson also removed the company from its Stampede list, along with BJ's. So I do think that this is also a bit of what investors are thinking about. The company actually flagged the stock's historic underperformance pattern following this announcement that it will be hiking its fees. And this is really just a sell the news event after that fee hike. Investors are really trying to grapple with what this means moving forward, especially as we think about the consumer.
Do we know what's the premium versus regular membership?
You're asking the wrong person.
Okay, we don't know what that is yet. Okay, all right. I'm just really curious what you get for that, because the premium membership is something.
There's no Costco's in Brooklyn.
Is there one?
Is there one?
There is all the way near Industry City, but then you have to actually have the space with which to have such things.
I see. Okay.
So, like, do I have the room for 97 rolls of toilet paper?
Right.
I do not.
Okay.
And I think you need a car for that.
You need a car.
If you don't have a car,
well, I live in Brooklyn, so I have a car. But yeah,
good.
This is all understandable. There is one in Queens, apparently. Samantha's telling us.
Okay, very good.
On the IB.
Okay.
All right, Nora, thanks a lot. Really appreciate it. Norma Linda joining us from Bloomberg News. All right, let's get to that CPI number and then the market reaction. Right, the S&P is down by about 0.5%. You're still seeing a bid into the bond market here with yields lower, dollar lower, as the CPI number cools. Lindsay Piesga is chief economist over at Stifel, and she joins us now. All right, Lindsay, what was your take? We already saw J.P. Morgan move up its cut estimate to September from November.
Well, I think that might be a little aggressive based on 1 month improved data or a 1 month better than expected report. I think rather this supports the Fed's message of caution as inflation slowly resumes its previous disinflationary trend. But we want to be careful And the committee wants to be hesitant not to repeat its earlier overzealous assessment of improving inflationary conditions, which, as you remember, at the front of the year was met by a number of head fakes. So despite the fact that we're seeing improvement in the data for now a couple of months, despite the fact that we're starting to see more cooling labor market conditions, this still falls short of that bar that the Fed has set at many months of good data. But that being said, each improving data point, the Fed and market participants, as we see, are increasingly optimistic that a policy change is around the corner.
Lindsay, I guess with a little bit of hindsight now, what do we make of that first quarter, those three reports on inflation that came in a little bit higher than expected? Were those seasonal? Was there something structural, or was it just a blip in a generally deflationary longer-term trend?
Well, I think this just underscores the bumpy and uneven nature of inflation. I don't think you can pinpoint one component to say that's what drove inflation higher, but rather it's a broader message of inflation is not on a clear-cut downward trajectory. We are going to continue to see unevenness and volatility in the numbers. And so this is where the Fed needs to really stay vigilant in its focus on reinstating price stability, not just hoping that we're on a sustainable downward track, but really keeping their focus on that bar of many months of good data to gain that needed confidence that we are on a sustainable downward trajectory back to 2%. This is certainly a step in the right direction, absolutely, but is it enough to justify a near-term rate cut? Not quite yet.
What more, though, do you think we need to see then? So if we just fast forward to November, what in these few months will we learn? The extent to which inflation is dropping, what would you be looking for?
Well, we need to see consistent downward momentum. We saw a little bit of an improvement in April, but I'm not really going to count that as a month of improvement. We saw more improvement in May, absolutely. June, we're starting to see more improvement. So we now have 2 good months under our belt. We need to see this downward momentum, this lack of upward pressure in inflation continue, not just in July and August, but to a meaningful degree to really give the Fed enough confidence that September would be the appropriate time to take its foot off the brake and allow a less firm policy response. But again, I would caution that the Fed is somewhat nervous about making a larger judgment call on such a short amount of data, given that volatility that we saw at the start of the year.
We had two pretty big kind of consumer-oriented companies report some weaker than expected results today, Pepsi and Delta Airlines. I still don't get the Delta thing. Every plane is packed that I go on. But it kind of goes to the question of how is the consumer out there? How do you view the consumer today?
Well, the consumer is still resilient. Now, there's no doubt that the American household is feeling the pain from higher prices, higher borrowing costs, the resumption of student debt payments. But we are seeing the consumer continuing to spend. It's more of a second derivative decline, a slower pace of still positive expenditures, as opposed to an outright decline in that spending pattern. But we see the support stemming from a combination now of organic and inorganic factors. On the organic side, with inflation coming down, real earnings have turned positive, and that's providing welcome financial stability to many households. We also still see a lingering supplement of pandemic savings. And with interest rates relatively elevated, we see positive earnings interest as well. Now, on the inorganic side, we continue to see a reliance on intergenerational wealth transfers, 401k hardship withdrawals, credit cards. But regardless of the combination, what we're seeing is there's a number of factors that are continuing to suggest a good amount of spending and borrowing power on the part of the American consumer, suggesting ongoing resilience and positive activity for the U.S., for the broader U.S. economy.
How would you categorize the job market right now?
Well, the job market is still tight, but it's less tight than what we've seen. We are starting to see signs of cooling. Headline job creation, as we saw, did face some sizable downward revisions to earlier months. But thus far for 2024, we're talking about an average hiring pace of around 225,000. That's on par with what we saw in 2023, with an average of about 250,000. So we're still continuing to see labor demand outpace labor supply, with wage pressures still up near 4%. So this is still a solid labor market, tight-ish conditions, but slightly less tight than what we've seen. And that's a welcomed improvement, suggesting that finally this elevated level of rate is having the intended negative effect on beginning to slow the economy, slow the labor market. But again, it's this very gradual decline in conditions as opposed to falling off a cliff.
Economic exceptionalism. That's a story, a narrative that I've heard, over the last, 12 months, characterizing the U.S. economy vis-a-vis, say, our friends in Europe or in Asia, particularly China. Is that something you ascribe to? And if so, what does it mean to you?
Well, I think first and foremost, we have to put the U.S. economy in the context of what we're seeing on a global basis, because as we talk about some of these nominal figures beginning to show signs of weakness, on a relative basis, the U.S. economy is faring significantly better than what we see in many of our developed counterparts abroad, which have either fallen into or teetering on recessionary conditions. So when we look at the U.S. growth rate now falling below 2%, nominally not impressive, but compared to what we've seen overseas, the U.S. certainly does appear to be the strongest component in that global picture post-pandemic, in this post-pandemic environment.
So was it least dirty shirt in a pile of laundry? Something along those sort of lines. Lindsay, when we look forward to the election, not necessarily that will impact growth in the short term, et cetera, but have you modeled out any kind of policies, whether it's tax increases / decreases or tariffs, in terms of what the economy might look like over the next 4 years as it relates to inflation?
Well, I think when we talk about the outcome of the November election, we have to remember that in many ways, it's going to be a number of sizable barriers regardless of who comes into power. Whether it's a second round Trump administration or a second round Biden administration, we're still going to face elevated prices. We're still going to face an ongoing divide between labor demand and labor supply, an ongoing gap between asset holders and non-asset holders. We're going to continue to face demographic issues, geopolitical risks, and international crises. And so in many ways, the pressures that are going to continue to retard the U.S. economy are going to be in place regardless of who's victorious in November. The biggest differences, as you mentioned, are going to come into play when we talk about immigration, border security, tax policy, specifically corporate tax policy, international trade, and any additional regulations that we see put in place. But the U.S. economy is on relatively sound, solid footing at this point. And I do think that we are going to continue to see this lack of momentum going into 2025, regardless of who comes into to power this November.
All right, Lindsay, thank you so much. We appreciate that. As always, Lindsay Piazza, she is chief economist at Stifel, joining us from her hometown, Chicago, Illinois, via Zoom. WTI crude oil feels like it's in a pretty tight trading range here, Alex. I'm looking at here just below $83 a barrel. Feels like that's kind of where it's kind of been there for a while.
Yeah, it has. There was an IEA report out. Now, whether or not you think that IEA reports are something to be, traded on, that's one thing. But they're looking at a demand growth that is slowing overall. Like the U.S. government report yesterday did show a lot of nice gasoline consumption, so we were seeing stockpiles withdraw a little bit. But overall, they're looking at oil demand growth will be less than 1 million barrels a day this year due to China really just that COVID rebound having run its course. But it's not like it's going to zero. It's just, slowing. So
all right, so the demand not as great as maybe initially anticipated, but OPEC, I mean, it seems like they're staying, they look pretty steady here. Yeah, did you see this talking about OPEC, which leads me to Saudi Arabia, which leads me to this article? Okay. On the terminal, Saudi Arabia is likely to cut billions of dollars in spending on some of its biggest development projects and place others on hold as they're dealing with this huge economic makeover. This would be a big shift and a big pause button. Yep. All right. So we can keep our eye on our friends in Saudi Arabia. $82.70 is the WTI crude oil. Brent crude, $85.60. I think it's something about the transportation. I don't know the difference.
Wait, what is it in Jersey right now?
About $3.37 a gallon.
That
So
went
it's
up
nice.
a little bit.
A little
Didn't
bit.
that go
It's
up a
still
little
solid though. We'll take that any day of the week. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 11:21 on Wall Street. We do check markets all day long here at Bloomberg. CPI Thursday. We got stocks trading decidedly mixed. The Dow higher right now. Dow Industrials up 0.2%. S&P down 33, down 0.6%. NASDAQ now down 239 points, lower by 1.3%. But the big story today in terms of the equity market, the Russell 2000 index surging 3.4%. Small caps on track for their best day so far this year. Bears repeating, Russell 2000 up now by 3.4%. 10-year yield 4.17%. The 2-year 4.49%. Spot gold up 2.1%, now at $24.20 the ounce. And West Texas Intermediate crude up 0.5%, $82.52 for a barrel of WTI. Investors, meanwhile, are sifting through this morning's CPI data. Lindsay Piegza is chief economist at Stifel Nicholas, and she says us, she told us right here on Bloomberg Intelligence, when it comes to the data, you got to curb your enthusiasm.
So despite the fact that we're seeing improvement in the data for now a couple of months, despite the fact that we're starting to see more cooling labor market conditions, this still falls short of that bar that the Fed has set at many months of good data. But that being said, each improving data point, the Fed and market participants, as we see, are increasingly optimistic that a policy change is around the corner.
Lindsay Pieggs of Stifel Nicolaus. Apple has avoided the threat of fines from European Union regulators by agreeing to open up its mobile wallet technology to other providers free of charge. For a decade, Apple shares today down 2.7%, all part of a broader tech sell-off. Case in point, NVIDIA down 3.9%. So again, recapping, equities decidedly mixed, with the Dow higher by 0.1%, NASDAQ down 1.4%, but the Russell 2000 up by 3.3%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you very much. I'm Alex Steele alongside Paul Sweeney. This is Bloomberg Intelligence Radio. We bring you all the top news and analysis with our great Bloomberg Intelligence team. They cover 2,000 companies and 130 industries worldwide. And we also take you outside to talk to CEOs, economists, analysts, and also get their take on what's happening. And for this, we go to real estate because housing stocks are getting a nice boost today, whether you're looking at REITs, whether you're looking at home builders, all thanks to those lower yields. So we're checking in now with Steve Jacobs, president of 10X. He's joining us from Irvine, California. And 10X is apparently the largest online commercial real estate auction platform. So it's a great window to give us a viewpoint on CRE market. Thanks for joining us, Stephen. We really appreciate it. Can you just talk me through how the largest online commercial real estate auction platform works?
Sure thing. Nice to talk to you. So we're in the business 13 years, and the difference between being online and offline is using our technology. Our customers do their due diligence when they're looking to buy a piece of commercial real estate before they actually purchase it, versus offline due diligence is done after they sign a contract. And by doing that, we shorten the time frame between marketing and closing a deal to about 100 days, 90 to 100 days, versus a 6-month process. We also eliminate the risk of retrades and fallouts. We have a 98% closing rate, and we've helped brokers trade over $32 billion of commercial real estate over the last several years.
All right, so Kendall, Steve, from your perspective, can you give us a sense of what you're seeing out there into the health of the commercial real estate market? Because that obviously it impacts folks in that business. It impacts the banks that finance that business. So investors are really interested in this space. What are you seeing?
So I've been, since the interest rates, it's going on 2 years. It was July 22. They really popped up. I have a phrase, and it's not that exciting, but it's just math, right? And when interest rates were 3%, cap rates on investments were lower. All right. Now what's happened is with interest rates going up to 5, 6, in some cases 7%. It just changes the value of the real estate. It changes what your investment return is going to be. So what's happened in sort of the state of commercial real estate is there's a lot of owners that own very nice pieces of real estate. There's nothing necessarily wrong with them, but the capital stock in the math has just been sort of turned upside down, if you will. And what if a building was worth $10 million when your cap rate was 3 to 4%? Now your cap rate is 6 to 8%. Your building is worth $7 or $8 million, and that has caused a lot of what I like to call stress for owners, because it has put values in some cases underwater based on what the debt is and based on what the value of the real estate is. It doesn't mean it's a bad piece of real estate. It could be a great piece of real estate, fully occupied, people paying rent, getting your NOI, your net income on the asset, but just on a value approach, it's worth something less than it was.
So when you look at the buyers and the sellers and the gap between maybe what the pricing looks like, how has that changed, say, in the last 6 months? And what do you think it's going to change in the next 6 months?
So that's a great question. So it's very interesting. So the gap has existed for a couple of years. To your point, And what we saw at the fourth quarter 23 and going into the first quarter of 24, we saw more activity, more interest from the investors really stepping up on our platform, bidding and buying assets, because the messaging that came up from the Fed is we're done raising rates. What we've now seen coming out of Q2 is still seeing similar activity. We are seeing buyers be more reserved, because what we think, or what I think, that the investors are waiting for is a message from the Fed. More than a message, we're reducing rates. Even if it's 25 basis points, the act of reducing the rates will set the tone going forward, and give more confidence to the underwriting for the investors that there is value in their underwriting, because rates will go down.
Steve, one of the fundamental problems with office real estate is I don't think anybody really knows where the market is. I think if you drive through any town USA and any generic office park, every single one has that sign in the grass telling you about how much square feet is available. With occupancy levels where they are, what is the value of commercial real estate? Are you seeing activity there?
So you're specifically asking about the office? Yeah, office. Yeah. So you're right. And I can tell you on our platform, we've actually been very successful in the last 6 months to a year of helping brokers trade office assets, but it all comes down to what the pricing expectations of the seller is. And based on what I said earlier, you may have and in this case with office, a 50% occupied office building. It doesn't matter really how nice it is or how nice the common areas are and the various improvements that have been made. If you have a 50% office building, 50% occupied, you're kind of in trouble, because what I think landlords and owners are searching for is how to get people back into the office space and how to lure companies back in. And I just think beyond the real estate, I think businesses and companies are struggling still with how do we get our employees back in. So if you have a suburban office building that's half vacant, and it's an older building, maybe a class B or C, you got to really get real with the value. And if you get real with the value, and you might have to take a hit, somebody will buy it. When that person buys it at quote unquote a discount, what the new investor can do is then lower it's a lower basis, right? So they lower the rent. So all of a sudden, this particular suburban building that might have been charging $25 a square foot under one financial model, because it was purchased several years ago, now can come in, buy it at a lower price, and now they can have the space be $12 a square foot when the rest of the market's 20. And that's how they'll attract tenants. I do think there's been a lot of discussion about urban downtowns and how they're really in trouble. But also the flip side of that is that the class A, so the best quality office buildings, are attracting tenants. I do think that they're giving a lot of incentives, and there's a lot of negotiation going on as far as pricing the leases.
Stephen, we just have about a minute left, but I was wondering, what about mixed use stuff? So you have an office building that's only 50% occupied. How do you get other people in there to do other stuff? Like someone was talking to me about a hotel that just encompasses 4 floors of a previous office building.
So there's a lot of discussion about that with regards to repurposing these buildings. Some of them can be, some of them can't be, but a lot of these buildings were built for office, right? So they don't have the right templates, the floor plates, right, to actually convert to hotel. Like think about it, a hotel room, needs windows, right? Every room needs windows, right? Office space, you need windows, but you can have people sitting out in the middle of the floor not by a window. Mm-hmm. It's the same with bringing them to multifamily. Not only is it expensive, super expensive, but it's not as easy as it sounds. And also you have to look at that market demand. You could have a 2 or 3 story office building in the middle of an office industrial park, and I don't think people want to stay in that as a hotel or a residence.
Yeah. We appreciate this. This was really interesting. Thank you so much, Stephen. Come back and let us know how it's evolving as the Fed moves towards those rate cuts and as yields move lower as well. Stephen Jacobs, president of 10X, joining us on the state of commercial real estate. But that's so hard. Like, how do you price something that's going to evolve over the next 5 to 10 years, right?
Yeah, it's really, really tough. And I just, and what we hear is reconfiguring those buildings is very difficult.
Yeah. All right, let's get to world national news. And for that, we're going to go right to Michael Barr. Michael.
Thank you very much, Alex, Paul, Charlie. President Joe Biden's re-election campaign continues to face pressure for him to drop out. Democratic senators and representatives expressed fresh fear about his ability to beat Donald Trump. Meanwhile, Democratic Congresswoman Haley Stevens of Michigan says she's sticking by President Biden and supports his re-election run.
I can't tell people to unsee what they saw in the debate. I thought he answered it honestly. Look, it's not news that he is the age that he is. I look at this and I see flawless execution from this administration. COVID relief, infrastructure dollars, not just bills that have gotten passed, but things that are being executed flawlessly, like the CHIPS Act, which is so important to our Michigan manufacturing economy.
Democratic Congresswoman Haley Stevens will appear with Biden in Michigan tomorrow as the president returns to the campaign trail. Testimony continues today in the involuntary manslaughter trial of actor Alec Baldwin, the trial coming more than 2 years after the fatal shooting on the set of Rust. In opening statements yesterday, prosecutors disputing Alec Baldwin's claim that he did not pull the trigger on the gun that killed cinematographer Elena Hutchins in October of 2021. And prosecutors told the jury that evidence will show a pattern of recklessness on the set.
He pointed the gun at another human being, cocked the hammer, and pulled that trigger. In reckless disregard for Ms. Hutchins' safety.
Defense lawyers say the shooting was a tragic accident. The Department of Energy is offering $1.7 billion to car makers and suppliers to help them convert 11 plants to prepare for the move to electric vehicles. The funding will be used to help convert assembly plants, parts plants, and even plants that make electric school buses. Global news 24 hours a day. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 11:40 on Wall Street. We do check markets all day long here at Bloomberg. We have got stocks trading decidedly mixed, but we got to begin with the Russell 2000 index. It is surging today, 3.2% higher right now. Going to be the best day for the Russell 2000 index this year. The Dow higher as well, up 90 right now, up by 0.2%, 39,813, moving closer back to that 40,000 level. The S&P and NASDAQ, though, both lower. NASDAQ hard hit, down 1.8%, down 328 points right now. The S&P 500 index down 45, drop there of 0.8%, but that Russell 2000 bears repeating, up now by 3.2%. The world's biggest bond market rallied as signs of disinflation reinforce bets that the Fed will be cutting rates in the next few months. 10-year yield 4.17%, with a 2-year 4.49%. Gold up $49 the ounce to $24.20, up 2.1%. Crude oil 82.54 a barrel. WTI up by about 0.5%. Inflation moderated in June, providing another dose of confidence for the Fed to cut rates. And with that story, here's Bloomberg's Vinny Del Giudice.
Core consumer prices registered the smallest increase in about 3 years, reflecting a long-awaited slowdown in shelter costs. New and used vehicle prices led merchandise costs lower. Airfares, hotel, and hospital stays accounted for a drop in service costs. That's in addition to rents. The consumer price data suggests this year's inflation flare-up is cooling. Bloomberg Economics sees the Fed cutting interest rates in September. Vinny Del Giudice, Bloomberg Radio.
Yokohama Rubber says it is weighing a possible acquisition of Goodyear Tire and Rubber's off-road business. Now, yesterday, recall, Bloomberg News reported that the Japanese company was in advanced talks to buy Akron, Ohio-based Goodyear's off-the-road tire business for at least $1 billion. That business, by the way, caters to commercial clients in industries such as mining. Again, recapping, equities mixed. S&P down 0.9%. The Russell 2000 up 3.2%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie Pello, thank you so much. We appreciate that. Alex Steele and Paul Sweeney, we are both live here in our Bloomberg Interactive Brokers studio in Midtown Manhattan. We're also streaming live on YouTube, so you can head over to youtube.com and search Bloomberg Podcast. That's where you'll find us. Delta Airlines, weaker than expected results here this morning. Stock trading down about 5% here, dragging down the other airline stocks. What's going on out there? I can't remember the last time I got on a plane and it wasn't packed. George Ferguson, Senior Aerospace, Defense, and Airlines Analyst. He joins us. We'll have the news. He's at Bloomberg Intelligence. So, George, what do we learn from Delta? What's going on out there in the airline business?
We're learning that fares are softer than I guess we all hope or expected. Paul, I think you just fly at core times, at really busy times for the airlines, because somehow they're not getting the same price point that the rest of their customers. Look, I think what we do know is that that the weakest part of the business right now appears to be sort of basic economy or those economy classes, and that's weighing it down. So actually, I expect that Delta's earnings report will be better than most this quarter. So I think it'll get worse and worse as you get into the low-cost and ultra-low-cost carriers. Because, again, that's, I think, where the majority of the pain is in fares.
Yeah, because, going through the quarter, like corporate travel rose 13% for Delta in the second quarter. Revenue from international passengers also increased, and premium products jumped 10%. So basically, business people are traveling. We're going overseas, and we're buying business class or first class. So, is no one going to Idaho in economy?
No, well, I mean, people are going. They're going for lower fares, right? Their load factors were great on Delta, right? They were like 87%, so they're filling airplanes as well as they filled the year prior. I think Delta will get a bit of a tailwind as business comes back. That tailwind applies to Delta, United, American, the big business airlines. I mean, management always paints a really nice picture of how everything is going, but every market but Atlantic showed lower yields year over year, and yields the price the customer pays per mile they fly. So to me, that's synonymous with fares. So what I saw was weaker fares. They were really bad into Latin America, down I think it was 12% or something like that. They're down a couple percent for the domestic market. Into Europe, it was up 1%, but if you do it on a unit revenue basis, I don't want to get too complicated about how that works, but let's just say that factors in load factors there. It was down. And so what that's telling me is that they're having a harder time filling airplanes going across to Europe at the price point they want to fill. So they notched back a little bit how full those airplanes were. So I generally think, from a revenue standpoint, not boding well at all for the rest of the airlines they're going to report. And I didn't see any sort of silver lining, for 3Q. It looks like a weakening market to me.
So talk to us about capacity out there, George. I thought that there's some capacity constraints out there which might push fares higher because maybe Boeing wasn't delivering as many aircraft as they want, maybe even Airbus as well, so the airlines didn't have as many aircraft as they really needed. Is that a capacity? What is the capacity of the industry these days?
Yeah, so I think that's a narrative that's definitely been going around the street, and I think that's pushed, some investment in airlines. So we haven't seen that, right? I think there's a couple things that are kind of working against that, and I think one, I think U.S. airlines in particular have been taking plenty of deliveries. They're prioritized by Boeing, right? Boeing sort of lost business in China. China's been weakening, so I don't even know if China needs as many airplanes as Boeing used to send to them. But they went around and got a bunch of orders from Southwest, United, Alaska, and Boeing had been feeding them airplanes before we had some of the problems earlier this year with the Alaska, flight. So that means most of the U.S. airlines had the airplanes they expected. Yeah, we saw Delta, they added, I think, 5% more seats, and available seat miles, they added 8%. When we look at this market, we see in both 2Q and 3Q additions kind of in that 5%, 6%, 7% range for seats in domestic, seats in Latin America, seats going into Europe. And that's well above GDP growth rates. And so what I think also is going on here is if you were an airline and you thought this bounce back travel post-pandemic, hey, there's all this pent-up demand, they're all going to fly this summer, and it's going to be growth greater than GDP, I think you were wrong, right? We're basically saying we think growth in travel is recoupling with GDP like it was prior to the pandemic, and you can't add 5% seats to this market. The U.S. market isn't growing that fast.
What part of any of this, and you kind of sort of answered it, is just also tough comps because we were expecting the scenario that you just lined out?
Well, I mean, another thing we've put together recently, it's on the Bloomberg terminal under our BI space AIRLN dashboard and AeroG dashboard. We looked at return on invested capital. We looked at margins at U.S. and global airlines. And, they did better last year. But if you look at last year, those margins weren't pre-pandemic margins. I mean, Delta's a bit of a standout. Their returns on invested capital are doing better than a lot of their competitors, and Bastian called that out a bunch of times today on the call, of course. But most airlines in the U.S. market are not getting returns on invested capital or margins like they were prior to the pandemic. So it is a tougher comp, I guess, coming out of the pandemic. But this is not the airline industry we saw in the past decade, and that's because we got record revenues, but those pilots took a big chunk, right, when they got their 20% increases, and the airlines aren't pricing to get that back.
All right, George, great stuff as always. George Ferguson, Senior Aerospace, Defense, and Airlines Analyst for Bloomberg Intelligence, joining us from Princeton, New Jersey. Are you flying anytime soon?
Nope.
No?
Whole lot of nothing.
Yeah.
Well, we're going to Orlando in October, right?
That's right. Go see Mickey Mouse. That'll be fun.
But that's a work thing.
Yeah. So I only travel when I get paid to travel. It's my new thing. Or if I'm going to Ireland, which I'm doing in September.
Meaning that you go international, do a big trip, but you're not going to go,
No, people can come to me.
It's fair enough. I mean, he's at the Jersey Shore. He's got stuff. I don't know. I'm not going anywhere. Although my best friend is moving to Costa Rica.
Oh.
So I feel like it'll be one of those things where I'll be like, hey, I got an extra day. I'm going to go to Costa Rica for 3 days for $200 on JetBlue.
Yes.
Which feels okay.
That sounds good.
All right, looking at the market here. S&P is down 0.8%. The NASDAQ really getting hit hard, guys. Down by 1.7%. The NASDAQ 100 off by about 2%. We haven't seen that kind of decline since April, so we're definitely watching that. This is Bloomberg. Happy Thursday, everybody.
company news headlines on Bloomberg Radio.
From Bloomberg World headquarters, I'm Charlie Pellet. We've got Pfizer shares advancing now. Pfizer up by 1.2%. The drug maker said it is advancing the development of its once-daily weight loss pill. Analysts see the news as positive for Pfizer, but note that additional data is needed to address the drug's potential. But Pfizer shares, they are up today. We got Pfizer up now by 1.25%. Earnings news. Big banks will be reporting tomorrow. We'll be hearing from J.P. Morgan Chase, Citigroup, and Wells Fargo. And, of course, this is when Bloomberg shines. We will be all over those bank earnings as they break ahead of the open tomorrow morning. But bank stocks, for the most part, lower today. J.P. Morgan Chase down 0.2%. Citigroup right now down 1.4%. Wells Fargo kind of bucking the trend today. We got Wells Fargo up 0.6%. Airline stocks flying lower. Delta down now by 5.5%. It expects profit this quarter to fall short of Wall Street's expectations. George Ferguson is an airline industry analyst with Bloomberg Intelligence, and he was a guest moments ago right here on Bloomberg Intelligence.
The weakest part of the business right now appears to be sort of basic economy or those economy classes, and that's weighing it down. So actually, I expect that Delta's earnings report will be better than most this quarter. So I think it'll get worse and worse as you get into the low-cost and ultra-low-cost carriers.
George Ferguson of Bloomberg Intelligence. Among the airline names, Delta down now by 5.6%. UAL down 4.4%. A lot of red here, with American trading lower by 5.8%. Southwest Airlines trading lower as well. We got Southwest down 3.6%. And JetBlue as well, lower now by 3%. And those are our top company stories at this hour. I'm Charlie Pellet, and this is Bloomberg.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
Happy Thursday, everybody. I'm Alex Steele alongside Paul Sweeney. This is Bloomberg Intelligence Radio. We are broadcasting to you live from Interactive Broker Studio right here in Midtown Manhattan. We want to keep you up to date now with all the world and national news. And for that, we go to Michael Barr. Michael?
Thank you very much, Alex, Paul, Charlie. President Joe Biden expects his all-important news conference this afternoon will reinforce the impression that he has the stamina to campaign effectively and run the White House for 4 more years. Bloomberg's Irv Chapman reports from Washington.
Though the president insists he is all in the race, former Speaker Nancy Pelosi said he should make a firm decision and do so quickly. Ed Mills, political analyst for the firm Raymond James, commented in a Bloomberg interview.
I think it was a turning point for Democrats. Clearly, the momentum had built to have Joe Biden step aside. Joe Biden starts to push back, and he does just well enough to stay in the race, was getting support on the Hill, and then her comments open up the floodgate.
Mills said Biden has won every election in his political life, and he's unlikely to pull out of this one. In Washington, Irv Chapman, Bloomberg Radio.
President Joe Biden is expected to announce that the U.S. will provide Ukraine an additional Patriot missile system to bolster its air defenses against a deadly onslaught of Russian airstrikes. 2 U.S. officials said the battery is part of a $225 million aid package expected to be announced during Biden's meeting today with Ukrainian President Volodymyr Zelensky. Jurors in New Mexico will continue to hear testimony today in the involuntary manslaughter trial of actor Alec Baldwin. The trial is coming more than 2 years after the fatal shooting on the set of Rust. In opening statements yesterday, prosecutors disputed Baldwin's claim that he did not pull the trigger on the gun that killed cinematographer Helena Hutchins in October of 2021. Defense lawyers say the shooting was a tragic accident. Jury deliberations are underway today in New York in the federal corruption trial of Senator Bob Menendez. In earlier closing arguments, prosecutors accused the New Jersey Democrat of selling his office, while defense attorneys mocked the government's case as, quote, cherry-picked nonsense. Senator Menendez is accused of accepting hundreds of thousands of dollars in bribes. Global news 24 hours a day and whenever you want it with the Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Paul, Alex, and Charlie.
All right, thanks so much, Michael Barr. Not to talk my book and stuff, but there is a really interesting oil article out on the terminal, and this is an exclusive here from Lee Nyland and Kevin Crowley, saying that the FTC is delaying a decision on whether or not Chevron and Hess can merge until after the Exxon arbitration. So background. Hess has a significant portion of the Guyana assets, which is a great offshore oil discovery. Exxon has a good chunk of it too, as well as CNOOC. So there's a right of first refusal, which happens in a lot of these things, where like if you're partnering with another company, that if another company wants to come in and buy that asset from that company, you can say, nah, I want to buy it. But if you go in and buy the whole company, there is no right of first refusal. That's the idea. So enter Chevron. They go to Hess. They're like, hey, let's merge. It'd be cool. Let's do the thing. Exxon says, no, we don't like that. We have the right of first refusal that we're going to exercise. No one's actually seen the contract, so we don't know what it actually says and what the details are. And now the FTC is delaying even whether they might allow that merger to go through. All of that means it's going to take a really long time to get this deal done. And in the meantime, we're just in limbo here for these three companies, in essence.
So as you mentioned, the delay is yet another blow to the embattled deal, which is still far from completion. Nearly 9 months after it was announced in October, the agency has made second requests for information for several large deals in the oil sector this year. So maybe that just the regulators are just looking at oil deals in general, number one, and number two, here, this one is a huge one. But again, I would think if I'm Chevron, one of the main reasons I'm buying Hess is for the Guyana property.
I mean, they're going to say no to that, but that kind of is the thing. Okay. And without Guyana, I don't think they're going to wind up going through with that merger anyway. So if you follow oil, this is cool. If you follow oil big stocks, this is also really cool to see how these frenemies wind up playing out. So, Paul, happy weekend to you.
Thank you.
Good luck getting home. I hope the ferry works for you.
It's going to work just fine.
Okay, round two there. I'll be with you tomorrow. Don't worry, we'll take you through all the market-moving events, big bank earnings up, and also Balance of Power with Joe Matthew is up next. This is Bloomberg.
Politics to the world of business. This is Balance of Power. Live from Washington, D.C.
Call it a gift for Joe Biden, hours before his biggest test. Welcome to the fastest show in politics as the June CPI shows prices cooling to the slowest pace in 3 years, just as the president faces a high-stakes news conference. It'll happen later today in Washington, D.C. amid new calls, additional calls from the Capitol on him to drop out of the race. We're going to have the latest on all these stories with insights from Democratic strategist Caitlin Legacki and Republican strategist Lauren Tomlinson. With analysis from our signature panel, we're putting the band back together today. Bloomberg Politics contributors Rick Davis and Jeannie Shanzano are back, and it's all after a look at Wall Street. We'll start there right now with Charlie Pellet on this CPI day. How's it look, Charlie?
Indeed, a very busy day, Joe Matthew. I know you got a lot of balls to juggle out of D.C. I'm watching the markets, and it's just earnings season just getting underway. Heard from Delta, PepsiCo, and of course, we got the big banks tomorrow. Right now, we are looking at a very mixed market. Do want to begin with the Russell 2000. Big news today. Small cap shares having their best day of the year. Russell 2000 up 2.9%. Decidedly mixed trading, though, with the Dow. Higher by 58, up by about 0.1%. S&P down 49, drop there of 0.9%, and NASDAQ lower by 340, a drop there of 1.8%. Got to keep it locked into Bloomberg Radio for the very latest on these fast-moving markets, but right now, selling off on both the S&P and NASDAQ. Russell 2000, though, completely different story, worth repeating, with that index up now by 2.9%. 10-year, 4.17%. The 2-year, 4.49%. We've got also today, as I mentioned, a very mixed market. Stocks being hit by a big rotation as yields tumble after that CPI report. As for the overall market backdrop, Brent Schutte is Chief Investment Strategist at Northwestern Mutual Life, and he was a guest this morning on Bloomberg Surveillance.
So we used to talk about risk on, risk off on the show when I came on, and risk off meant buy bonds, risk on meant buy stocks. Today, risk off means buy the Mag 7, risk on means buy the other 494 companies plus the mid-cap and small-cap sector. And so to me, I think investors have already discounted that. They've been hiding away in quality where earnings have actually grown. I think the biggest question going forward is how much do you pay for the Mag 7, and can those earnings grow forever, which I think is a question that I've seen asked a few times in my history of doing this, and I think the answer is probably likely to be not.
Brent Schutte of Northwestern Mutual again, 10-year 4.17%, 2-year 4.49%. Briefly, Shelley Duvall, star of the movies The Shining and Nashville, has died at age 75. Balance of Power continues now. Back we go to Washington. Once again, your host, here he is, Joe Matthew.
Charlie Pellet, thank you. Shelley Duvall, man, come on. You start the hour with that headline. Welcome to the Thursday edition of Balance of Power here on Bloomberg Radio, satellite radio, and on YouTube. On this day of days, it's the news conference that we've been talking about for a long time that will end this day for Joe Biden. And we'll get into this a lot more later with much analysis ahead of and following the news conference. We'll have special coverage tonight, and it's looking like it's going to be later than we thought. But how about this? As Joe Biden is preparing to face a sea of reporters, the world watching, he wakes up to a nice gift on the North Portico. A CPI report showing cooling inflation, cooling broadly, as I read, the byline from our friend Molly Smith on the terminal. Slowest pace since 2021. Yeah, remember back that far? You remember what was going on? The back of a long-awaited slowdown in housing costs. Didn't think I'd be saying that this morning either. Core consumer prices, right, excluding food and energy, which of course no one pays for, climbing 0.1% from May, the smallest advance in 3 years. So, hey, maybe that September rate cut is in the cards. Stuart Paul is joining us, I'm glad to say, a Bloomberg Economics U.S. economist from World Headquarters in New York. Stuart, am I framing this right? Is there anything bad in this report?
It was a pretty good report. As you mentioned, the core consumer price index increased very modestly to 0.1% during the month. And as Molly mentioned on the terminal, and I believe online as well, that's the slowest pace in about 3 years. To your point, though, I sensed a little bit of sarcasm in your voice. Some of what we're seeing in the headline disinflation, the headline actually declined during the month very modestly.
Yes.
A lot of that is due to a 3.8% decline in gasoline. And yes, folks do have to pay for gasoline. They are feeling a little bit better with gasoline prices declining. It is an abnormal thing during the summer to see that sort of a decline. Most importantly, though, is the step down in shelter prices that we saw during the month. The price of rent, the price of owner's equivalent of rent. So we're stripping out things like homeowners insurance, property taxes from homeowners equivalent. That increased at a pace of just 0.3% during the month. That's a notable slowdown from what we have been seeing. And since it comprises such a large share of the consumer price index, it is probably the most notable aspect of the report.
Fascinating. You talk about the whole road trip package, forget just gasoline, add the car too, with new and used vehicle prices heading lower. These have been pretty stubborn as well, Stuart, but it's also the same month when there was a cyber attack that brought car dealerships to a halt around the country. So is this an aberration or something that we can feel good about?
I think that we can feel good about the used autos in particular. A 1.5% decline during the month for used auto prices, and that's a relatively long-term trend that we've been seeing. That slowing, that actual declining of used auto prices. I think that what we saw in new autos could have been affected by that cyber attack that you mentioned. We saw a pretty notable slowdown in the pace of auto sales in June as a consequence of that cyber attack. So I'm not reading too much into what's going on with core goods, but I think that this is a sort of thing that might be a little bit of a head fake, but it is one of the key categories that policymakers are looking to because it is so interest sensitive of a spending category.
You said the most important word, though, and we've been waiting months upon months to hear it, disinflation. It's real, Stuart.
It is real. It's definitely real. It's most notable in some of the key services categories like shelter. There are some labor-intensive services that are still seeing a bit of tailwinds that are a bit of a problem. Some of the discretionary spending categories like airfares like hotels, we saw notable price declines during the month. And if people are feeling a bit more stretched, if they're spending less on those discretionary services categories like air travel, like hotels, you could expect the Fed to start getting a little bit more comfortable and a little bit more confident in the disinflation and the inflation trajectory, and could start inching towards rate cuts. In fact, that's what we're seeing in markets. Folks are now really starting to price in a September cut.
Fascinating stuff. We're all so careful about this. Nobody wants to ring the bell, and I don't want to push Stuart into that position, but your optimism is well received. Stuart Paul, thank you, sir. Bloomberg Economics live from New York on this CPI Thursday. So, pretty good breakfast for Joe Biden. What's dinner going to taste like? 5:30 was the original call time for the news conference. They've moved it back to 6:30 p.m. now, and nothing starts on time in this administration. We know that. So maybe we're reeling into the 7 o'clock hour here. We're pushing bedtime. I know, you'll tweet me about that. Hey, I start falling asleep after 8, by the way. I've been very open about that. So if you're playing along on your home game, and this has been a little bit difficult as we prepare to bring in our panel here, Senator Peter Welch of Vermont becomes the first Democratic senator to go there, calling on the president to step down. We just heard as well, West Michigan Congresswoman Hillary Scholten jumping on board for the good of our democracy, says the statement. Yesterday we had Pat Ryan, we had Earl Blumenauer, and again, if you're keeping score in your home game, it appears to be a dozen now, a cool 12 congressional Democrats, which frankly, you know, with more than 200 to go here, is not exactly the dam breaking. But everyone's waiting on tonight. And as I'm reading in the tip sheets this morning, there are members of Congress reportedly statements just like these ready to go after world leaders leave town, because that would be the appropriate thing to do in this NATO summit week. Let's bring in our panel. Caitlin Legacki is back, and it's been too long. Democratic strategist, Four Corners public affairs partner, and Lauren Tomlinson, Republican strategist, Claffey Communications president. Great to see you both. Caitlin, where's your head on this? I'll be curious to hear how you're coming in today, because the numbers are slowly ticking higher on lawmakers, but we keep hearing that many are holding back to see what happens tonight. What's going to take place when the president holds this news conference?
I think a lot of folks are going to be holding their breath, waiting to see how this goes. I do think that this is really a make or break moment for the president. But I think you also have seen leaders like former Speaker Nancy Pelosi really setting tonight as kind of the benchmark for when people can start expressing their concerns. And I do think that it's a very real dynamic that a lot of members have been waiting until after this evening to express their position on this. But you've also felt a very real, vibe shift in the last couple of days. And I think that's due in part to a lot of folks starting to see polling up and down the ballot that is deeply alarming. And the idea of a Republican trifecta is now becoming a very real concern among elected officials. And so more than anything, I think that's going to affect who comes out and when to really air out their concerns and try and invite a change at the top of the ticket.
Lauren, your background, aside from politics, is in national security, geopolitics. What are you hearing about these world leaders who are with Joe Biden? You've got 31 other world leaders in town. And from everything that we're hearing, this is the only conversation that's taking place behind the scenes at this NATO summit.
Yeah, you're hearing a lot of diplomats express the same concerns that Americans are expressing, which is they're watching Biden like super closely to see how he walks, how he talks, his slip-ups. Now everything has all of these additional meanings because of the domestic conversation around his mental acuity and his ability to do the job. So they're also having a lot of side conversations with Trump administration officials, former Trump administration officials, people who could potentially be in the State Department or the Department of Defense or the National Security Council, all of these positions under a Trump administration, because they're viewing it as a very, very real possibility that President Biden is not in office come November. I think to your point about holding the statements until the world leaders are out of here, I think that's right. I wonder if there even is a press conference tonight. There may be some sort of reckoning by the end of this where, they decide that President Biden shouldn't go out and do the press conference.
Really?
I think.
Are you hearing that, Lauren, or are you speculating? That would be a big deal.
I'm speculating. If I'm the White House staff, I'm not putting him out there like that, because
Well, it's game
less
over in that
than-
case, isn't it?
Absolutely. I mean, I think it is, they have set the stakes so high for this press conference that if he does not knock it out of the park, do it for over an hour, answer every question under the sun, under every question, under every topic, and not get frustrated with the media and the White House press corps, who, they're very frustrated right now. So this is not going to be, a friendly group of people that are coming to ask him questions. It's going to be a failure no matter what. So I think because these expectations have been set so high, I don't know how he exceeds them. And unlike the debate, they were downplaying expectations and he still fell below them.
Yeah.
So I don't see how he wins this. I don't think that the ABC interview ends up happening either. I think this all kind of comes to a resolution by the end of this week. They're not going to want to go into the RNC convention with still this messaging going on. And most importantly, all of those Democrats who have come out against President Biden publicly already are from vulnerable districts. And so they are the ones that have the most to lose here and the most to gain by speaking up. So I think that that's why they are willing to go first on a lot of these statements.
Wow. All right. Caitlin, Lauren just said a lot. This is moving quickly, certainly in Lauren's view. I wonder your thoughts with what we just heard here. There's a new Washington Post, ABC News, Ipsos poll out. 56%, a majority of Democrats nationwide, think Joe Biden should end his candidacy. Is this just a big setup tonight, as Lauren implies?
I mean, I agree that it's going to be very difficult for him to walk out of that room with a win. I think it is somewhat of a no-win situation for him. I think he's still going to do it. But I think the reality of this situation is that President Biden is a very prideful man. He has an incredible record to run on that he's very proud of. And so there is a challenging dynamic at play where, even looking at this morning's inflation numbers, that is good news for Biden. Like on the policy, his presidency has been a resounding success. But there is this dynamic where he cannot escape the age question. And I think the biggest challenge he's going to face tonight is being able to address the questions he's going to get with humility and without defensiveness. And that has long been a challenge for him in terms of defending his record. So I tend to agree that it is going to be a tough dynamic tonight. I think there's no universe in which they pull the press conference because I agree that would be game over. But I also think that, sometimes you have to let people fail. And that's really what it's going to take for President Biden to realize that he may need to step aside. But, if after the debate and after the ABC interview, he still is not quite there yet, I'm not sure what's going to move him to that place.
Sometimes you have to let them fail. This is remarkable listening to you two. Both Caitlin and Lauren are referring to a Lester Holt interview scheduled for Monday now that was added late yesterday. NBC News will see apparently if we get there. The idea would be to counter-program the first day of the Republican National Convention, which is coinciding with all of this. We're still waiting for a VP announcement from Donald Trump. And Lauren, we've got news now from the New York Times. This is new since we came to air. The Biden campaign quietly carrying out a head-to-head survey of voters between Vice President Kamala Harris and Donald Trump, in a sign of the uncertainty even atop the Democratic Party. What does that tell you for running new numbers on Kamala, Lauren?
I think it just reinforces what we were discussing, that this is coming to a quick end here before the RNC convention. But what I've seen, at least with the polling with the vice president, is that she doesn't poll particularly well against Donald Trump. So I'm not sure that ends up being the answer or the best answer for the Democrats. But again, they have to go ahead and do this polling and figure this out and have a secondary strategy in place because they don't have a ton of time. right, between now and November. So they've got to cut all new ads. They have to do all new messaging. They've got to get their surrogates together. They've got to go get their door knockers. So there's a lot of campaign infrastructure that'll need to shift in order to accommodate a new candidate and a new vice president candidate, a completely new ticket. And not to mention the questions about where some of the financing and the money goes in those situations. So they've got to figure it out quick. And so it makes total sense that they would be doing contingency planning and polling at this stage.
Caitlin, I'm going to pull another number out of this same Washington Post poll that I mentioned here, just to contradict myself and my direction of questioning. Because while this poll does find a majority of Democrats, as I just said, think that the president should drop out of the race, you know what else we find? They're tied here. Joe Biden and Donald Trump each get 46% support among registered voters, and that is identical to where we were in April. So should we not have some sympathy for a president here who's looking around saying, this hasn't actually changed the game according to these numbers?
Yeah, I can absolutely understand why he and his team are saying that. I think what it really speaks to is how much the opposition to Trump is really baked in. You know, there is a hard ceiling and a hard floor for both of them right now. And the question that is the $1 million question is really, what does changing the ticket do to that in terms of, you know, if you're seeing all of these people saying Biden is too old and all of these people wanting to drop out, does that make an alternative more palatable? And I think that's really at this moment in time an unknowable question. But it definitely does kind of reinforce his position, and it steals his spine and gives him more ammo to stay in the race. And I think that's part of why this decision is so challenging for a lot of members is, you know, we all know what we saw. We all know what people think about Joe Biden's age, but this is a very polarized moment in time where people have very significantly calcified positions on both of the candidates. And so it is an outstanding question of how much people are willing to be persuaded or influenced by a change at the top of the ticket. And I think it's genuinely unprecedented. And anybody who tells you they know exactly how it plays out is either lying to you or deluding themselves. And so that's part of why this is so difficult for a lot of folks.
Well, Caitlin, you're a Democratic operative here in Washington. I know how Lauren feels. You've been an ally of Joe Biden. You've supported this administration. Do you think he should drop out?
I think he needs to make the best decision for him. And I think that there's a lot of very serious concern about impacts to the Senate and the House. And I think if democracy really is on the line, then that's what we need to prioritize.
Lauren, I guess I should just make this official with you. I understand you think it's over for Joe Biden, but as someone who's represented aging politicians in the past on the Hill and at the Department of Homeland Security, do you think this is how it should end for him? Drop out now?
You know, I hope that he finds a way to exit gracefully, and that's why I actually think he shouldn't do the press conference tonight, and spend time anointing a successor, shoring up his legacy, and getting to brag about everything that he has done over the past 4 years. Because you don't want to go out on other people's terms as a politician. You don't want to lose an election, and you don't want to be forced out of office. You want to retire gracefully and be able to talk about your wins and successes and help shepherd in the next generation of leadership into your old seat. And so I think that from a advice for an aging politician, that hopefully is what his advisors are telling him. You don't want these like George Clooney New York Times columns to be part of history and part of your legacy. You want to be the one that defines this. So that would be my advice and how I would be handling it. And, you know, he is a unique candidate against Donald Trump because he appealed to these swing state blue collar voters. where the Democrats are not going to have necessarily a candidate that can appeal in that way. So that's why I'm not surprised that the national polling hasn't really moved that much, but where the polling matters the most is in those swing states. And I think that's going to ultimately be the pressure point that forces him out.
There you have it. Smart talk, somber conversation, but we needed to hear from both of you, and I'm glad you could join today in a great panel. Caitlin Legacki, Four Corners Public Affairs, Lauren Tomlinson from Claffey Communications. Thank you so much, both. That news conference we're talking about here has been rescheduled now for 6:30 p.m. Washington time. We'll let you know if that changes. We also will remind you that things tend not to start on time when it involves the president and 31 other world leaders. When it happens, you'll hear it and see it live here on Bloomberg TV and radio. In the meantime, let's get up to speed on the markets right now. We turn back to Wall Street on this CPI and earnings day. Charlie Pellet has the latest from New York. Hey, Charlie.
Hi, thank you very much, Joe Matthew. Lots going on, lots of moving parts. Indeed, want to begin with a developing story reported by Bloomberg News. Tesla is delaying its planned robo-taxi unveiling to October to allow teams working on the project more time to build additional vehicle prototypes. Shares of Tesla, they are down now by 7%. CEO Elon Musk set the initial August 8th date for the event months ago, but it now looks like that date has been shifted to October. Again, Tesla shares down on that news. A Bloomberg exclusive, Tesla down now by 6.9%. A decidedly mixed market today. We got the CPI report this morning. The Dow holding on to a gain now, barely up just under 0.1%. Dow Industrials up 21 points. The S&P 500 index down 49, a decline of 0.9%, while NASDAQ is lower by 129, a drop there of 1.8%. The other major story involving markets, though, is the surge in the Russell 2000 index. Small cap shares enjoying their best day of the year. Right now, we got the Russell 2000 up by roughly 3%. 10-year yield, 4.17%. The 2-year, 4.49% on that 2-year. Traders are cheering signs of disinflation. They are sending bond yields tumbling on bets that the Fed will be cutting rates soon. Those wagers also sparking a strong rotation in the U.S. stock market. So again, recapping here, we got Tesla lower, Tesla down by 6.4%, delaying the robo-taxi. S&P lower by 49, drop there of 0.9%. Lots going on. Balance of power continues. Back we go to Washington. Once again, your host, here he is, Joe Matthew.
All right, Charlie, we do thank you, sir. Charlie Pellet in New York with his eye on the markets for us every day here on the fastest show in politics. We'll get back with Charlie in just a few here to see how things are shaping up on Wall Street as we continue the beat here on Joe Biden's political future with a lot of questions going into this news conference that'll take place at the conclusion of the NATO summit here in Washington later today, 6:30 p.m. Eastern time. At the moment, it's already been rescheduled once, and of course, things rarely start on time, so we'll be there when he shows up. Of course, we'll bring you the sights and sounds of what could be the true test. We've been talking about it that way throughout the week, and now it appears to be even higher stakes with reports that many Democratic lawmakers are withholding already written statements calling on him to drop out of the race out of respect for him while 31 other world leaders are in town. This isn't exactly the greatest time to be urging Joe Biden to leave the campaign in the throes of the 75th anniversary of NATO. And, you know, you got the new prime minister here from Great Britain. He's doing the bilat with President Zelensky today. So what's tomorrow morning going to look like? It will probably depend greatly on his performance, though, of course, there are Democratic lawmakers who don't want to wait, and we've added a couple of more here in the past couple of hours. I'm guessing they're off the Christmas card list at the White House as Senator Peter Welch of Vermont becomes the first in the upper chamber, the first senator, Democrat, of course. Congresswoman Hillary Scholten of Michigan, the latest on the House side, and we've got about a dozen Dems now here. The Senate, of course, is in the president's focus, the campaign sending staffers to Capitol Hill to meet with senators today. And that's where we start our conversation with Mike Dorning, Bloomberg News congressional and political editor. We're overdue. I hope you're well. Thanks for coming back on the program.
Great.
You've been covering Washington for a minute. Never seen anything quite like this.
Yeah, absolutely.
Is this the new deadline then tonight for Joe Biden? Because it does feel like this talk of floodgates may have yet to come true.
Well, it is a deadline. I wouldn't say it's the deadline, because one thing about this is it's really hard for the Democrats to force Biden out. They have to get him to quit, basically, because they're his delegates that are going to make this decision.
Kevin Legacki just said sometimes you have to let things fail.
Yes.
What does that look like for the president, though?
Well,
on the public stage.
I think that there'll be more people that will put pressure on him, regardless of how he does tonight. I mean, even if he knocks it out of the park, that's not gonna totally reassure people, because this is nothing like an extended debate or an extended town hall.
Yes.
But you can see more pressure coming, and that will then bring him around, and then eventually someone will probably try to go to him to try to persuade him. But if he's dug in, it's really hard for them to dislodge him.
Yeah, and you're going to see more interviews like the one we saw yesterday with Nancy Pelosi. How important was that? There are some in the press who think that was the moment, that instead of knocking on the door in the Oval Office, you just got it. It happened on MSNBC.
I don't think that is yet at the... They do need that knock on the Oval Office if things do turn against him. But it was a key pivotal moment. There was a pivotal moment at the beginning of the week where he got the Black Congressional Caucus, the Hispanic Caucus, the unions to come out with him while he said, enough is enough, we're done, I'm sticking. And those pillars of the Democratic establishment said, we're sticking with him. So that kind of blunted things for a moment. But then Nancy Pelosi coming out and saying, well, we're waiting for him to decide, even though he's like, said he decided, he's like, we just haven't really gotten the decision we want yet. And I hope that people will hold off on, criticizing him until Thursday.
Yes.
After the press conference.
So Friday's going to be a hell of a ride.
That's her sort of creating a backstop to this stymieing. That's like her saying, okay, well, that was then, and now we're going to have another chapter to this. What we have right now in the Democratic Party is essentially this internal struggle between the fear of the known and the fear of the unknown, between loyalty and pragmatism. And in politics, pragmatism usually trumps loyalty. It might take a while. You might have the Black Caucus, Hispanic Caucus unions being loyal to the president that was loyal to them for a while. But ultimately, everyone usually makes a pragmatic choice, and they just have to assess these risks.
Sure. And then you just wonder, how long is the window open for this debate to take place? The reporting in the New York Times, which, my God, talk about not being on the Christmas card list. The New York Times now says that the Biden campaign is running numbers, Kamala Harris up against Donald Trump, because we might have to go there. Is that the beginning of the pragmatism setting in?
It may be, and I don't really know yet whether they're running those numbers to try to prove a point that she would be not perform as well as Biden, and how they've done this, or whether it's a true good faith test of these numbers for Biden himself to think, and for his advisors to think, okay, would this be better or not? Because either way, it's a big gamble. As George Clooney was saying in his piece, not only do we have what has happened already with the disastrous debate, but now you have all the Democrats. Every time Biden gets up to talk without a script, they're all on the edge of their seats, like, what could go wrong? This is a risky moment. But you go and have Kamala Harris or another Democrat change horses this late, and they're not that well defined with the American public. If you'd been through a primary, they would have had a strong image, strong definition. The Kamala Harris that America knows right now would not be the same as in a month, after Democrats have spent a lot of time trying to build her up, and Republicans spend a lot of time trying to tear her down.
Sure.
She may be a stronger person, she may be a weaker person after all that, but you don't know yet.
We're about to find out, it sounds like. And the reaction from Republicans on Capitol Hill in our last moment here. The House voting today on holding the Attorney General once again in inherent contempt. So I guess the Sergeant at Arms is going to bring his weapon out or do something here over withholding audio recordings of Robert Hur's interview, the testimony with Joe Biden, the special counsel, which resulted in him calling him a forgetful old man, I believe was the language. Is that what's going to come from this? Will there be enough demand and enough capitulation in the U.S. House on Capitol Hill to get those tapes released?
Those tapes, I would predict,
not going to happen.
Not going to be released.
That could be a game changer if they were.
You know, I think even if the tapes are released, it's the debate the American people see.
That's all they need to see.
That's going to be more persuasive to people. This like tapes thing, in my view, is more of a sideshow. We've already seen him in our living rooms, on our TVs, and that's the impression people are going to have, and that's a hard impression to change. He's going to have to he would have to do a lot to change that impression. And the tough thing for him is people are thinking not like what's his capacity now, but what's his capacity 4.5 years from now? What's he going to be like then? I mean, you know, you don't know how these things go, but you know, people sometimes get worse as they age.
Sure, absolutely. Thank God my employer's not asking me about that about myself.
Yes.
New salvo from the New York Times. Kaylee just sent this to me on the terminal. Some Biden advisors discussing how to convince him to step aside. We're going to get into that with our panel. They're both back today. Rick Davis and Jeannie Shanzano are coming up. Mike Dorning, many thanks as always. Find them on the terminal and online. Let's get you up to date on world and national news now with Nancy Lyons in the Bloomberg 99.1 newsroom in Washington. Hi, Nancy.
Thanks, Joe. President Biden is set to meet with Ukrainian President Volodymyr Zelensky this afternoon as the NATO summit wraps up here in Washington. This comes after the 75-year-old alliance approved a joint communique yesterday affirming Ukraine is on an irreversible path to NATO membership. Well, what's left of Hurricane Beryl that came ashore earlier this week in Texas is still wreaking havoc. This storm has brought flooding to Vermont. Some communities there are even under evacuation orders. Emergency officials say it could take days to assess the damage. At least one person has died in the state, according to the governor, and more than 1 million customers in the Houston area are still without power after Hurricane Beryl swept through. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Nancy Lyons.
12:40 on Wall Street. We do check markets all day long here at Bloomberg. CPI Thursday. We are looking at a mixed market. Stocks being hit by a big rotation as yields tumble after this morning's CPI report. Right to the numbers. We got the S&P down 40 now at 55.93, falling back below 5,600. A drop right now of 0.7%. The Dow higher, little changed, up 40, gain there of 0.1%. On NASDAQ is now down 277 points for the NASDAQ Composite Index, a drop there of just about 1.5%. Big news, though, with the Russell 2000, best day of 2024. The Russell 2000 Index of small cap shares surging now by 3.2%. 10-year yield, 4.17%, with the 2-year, 4.49%. Mixed news in today's report on jobless claims. And with that story, here's Bloomberg's Vinny Del Giudice.
The total number of workers collecting unemployment benefits is holding near a 3-year high, a sign it's getting tougher to find a job. And yet initial jobless claims matched the largest weekly drop in a year, a positive sign, with the national unemployment rate now hovering at a 2-year high. Any improvement may be fleeting. Bloomberg Economics warns the longer-term trend suggests we're in a slowdown. Vinny Del Giudice, Bloomberg Radio.
Sources tell Bloomberg Tesla is delaying its planned robo-taxi unveiling to October to allow people working on the project more time to build additional vehicle prototypes. It had been scheduled for the unveiling on August 8th. Tesla shares, they're down on that news, dropping by 5.5%. So again, recapping here, we got the S&P down 39, drop there of 0.7%. 10-year yield, 4.17%. Cannot ignore the Russell 2000 today, up 3.2%. Balance of Power continues now. Back we go to Washington. Once again, your host, here's Joe Matthew.
Charlie Pellet, thank you. Watching Wall Street here on Balance of Power every day on Bloomberg Radio, on Sirius XM, and on YouTube, where you can find us right now if you're not there already. Go to YouTube and search Bloomberg Global News, whatever, Bloomberg Business News Live. You'll find our live stream, and that's all you need. We're there every day. All the shows on there. You can even back it up if you missed the beginning of an interview. This is the big day here. We're all waiting to see what happens tonight. 6:30 p.m., the new time, Washington time, for the President of the United States to hold forth at the conclusion of the NATO summit here. Our reporters will be in the room, and there will be reporters from all over the country and all over the world there asking him questions about a range of issues, though mostly his age, his acuity, his purpose for being in this race, with additional calls now for him to drop out, from Democrats included. We now have our first senator. We're about a dozen Democratic House members. And then there's the New York Times. Man, if MSNBC is on one shoulder, the New York Times is on the other. And they're not whispering to Joe Biden. Since we have taken air less than an hour ago, 2 major salvos. One, we already talked about, the Biden campaign testing numbers on Kamala versus Trump. And now this. Biden advisors discussing how to convince him to step aside. You can hear the cries coming from the other end of Pennsylvania Avenue right now. Close allies of the president, writes the Times, are developing a case for why he should end his re-election campaign, though not clear discussions have reached him yet. They're actually having this conversation. They're practicing it, according to the Times, before bringing it to the president. Now, of course, a lot of things could change tonight. Is it possible he could knock it out of the park? Does he have to do push-ups on the stage? Or does it simply reset the clock? With reporting today that many other lawmakers, Democrats, have statements written and ready to go tomorrow morning. They're, out of respect, waiting for world leaders to leave town. Now, we have a lot of great panels here on this program. We already heard from one today, and I get smarter from all of them. But I have been listless without these two. They're back with us when we need them most. Jeannie Shanzano, yes, and Rick Davis, our signature panel, Bloomberg Politics contributors. We've missed you both. Of course, Jeannie, Senior Democracy Fellow at the Center for the Study of the Presidency and Congress. Rick Davis, of course, at Stone Court Capitol. Bring me in off the ledge, Jeannie. I can't imagine you. I haven't spoken with you since the debate. Is this actually the test tonight, or is it already over?
This is a test. I don't see it as a final test, but I do think that the president is going to have a difficult time, regardless of how well he performs tonight,
in convincing Democrats, particularly in these competitive districts, that he should stay put. You know, I'm sitting in New York. This is a state that some well-placed Democrats are now calling a swing state. This is a party that is losing young voters in droves that they won by 24% last cycle. So the bleeding has to be stopped. And I think most people familiar with Joe Biden know he doesn't want to be responsible for that bleeding. And so I think the hope is he will come on his own to a conclusion that is in the best interest of the party, the House, the Senate Democrats, and the presidency itself. And I do think he will get there. So tonight, it's another point at which he can try to prove himself. But I'm not sure, even if he did the push-ups you're recommending, Joe, not recommending, but talking about, I don't think it would be enough to quell the enormous outcry and concern that you're hearing in Democratic circles.
Wasn't it Buzz Aldrin who did like a one-arm push-up or something? I don't know if that's going to happen tonight, Rick, but I'll ask you the same question maybe a little bit differently after what we just heard from Jeannie. Is this the test or a test?
I'm not even sure it's a test. I mean, think about the conversations you've been having on the program already. I mean, I think the jury is already spoken. This case is closed. I think it's just a matter of going through the motions of how and when Joe Biden's going to get out of this presidential race, and he may be the last one to try and figure out that the jig is up. But I actually think this may be overkill. I don't think he's going to convince anybody with a stellar performance tonight that he is somehow overcome the debate debacle and is going to mount a campaign that can, frankly, get back to status quo ante. And that was just after Donald Trump's, 34 convictions of a felony counts. I mean, like, think about where we were just a few weeks ago. I mean, Democrats were high-fiving each other. Oh, my God, how could a man who has, 34 felonies become president of the United States? And the polls started to reflect an upsurge for Biden in that regard. And then after the debate, the entire world imploded. And that world is still imploding. You look at the most recent, Monday polls from Emerson on swing states. Yep. Trump is up by 6 points in some of these states that were even only a few weeks ago. And so I think Democrats, they're into self-preservation. It's a messy party. They're not well organized. What we're seeing is sausage being made. And in politics, that's never a pretty picture. But I don't think there's any way a few weeks from now, going into the Democratic convention in Chicago, that there's like this upswell of rah-rah support for Joe Biden for president. That has ended. And so, tonight's press conference, more power to him. Hope he does well. But any little slip, any little problem just renews the commitments people already have, which is how do we get this guy out of the race?
Rick mentions the polls that we've been seeing this week. We got a new one today, Jeannie. Washington Post, ABC News, Ipsos, with some brutal headlines here. Say it simply, most Democrats want Joe Biden to drop out. When I say most, I mean 56%. How about this? 2 in 3 adults say the president should step aside. And that sounds noisy to me. But there's another one here. The top line, they're tied. It's Biden 46, Trump 46, Jeannie, the same that we had in April. So which numbers do we pay attention to?
Yeah, and that last number is what the White House, it's what the campaign, it's what Joe Biden is talking about. Look, for all of this, we are tied. I am still in this thing. And he's not wrong about that. But the reality of this election has always been whoever is the focus of attention is going to lose. And if you just look at the media attention alone since the debate, it is Joe Biden 90%. Donald Trump was out last night or yesterday at one of his few rallies and since the debate saying some really, really crazy things. And yet very little attention on that because it's all about Joe Biden. Can he do the job? Is he up to the task? That's not where the party can be at this point. And let me just add to that number. Cook moves 6 states from the Democratic line in the wake of all of this. Democrats are very concerned that they may not only lose the White House, but the House and the Senate. And they are looking at things like Project 2025 and saying, can we risk this? And again, I think everybody who knows Joe Biden knows as much as he feels like he can do this, he does not want to be the cause of what many Democrats see as a disaster in the offing. If he stays in this thing, loses the White House and Congress to boot. So I have to say, I agree with Rick on this. I don't see him continuing in this, but it's going to have to come from him. He does have the delegates, and I think that's what we're waiting for is once NATO is over.
Well, maybe I didn't hear you say that, Jeannie. You think it's over for Joe Biden?
I do think he is going to step aside, and the Democrats need to work very quickly to figure out how to move forward. There are a lot of plans being discussed, but yes, how can he continue under these circumstances? It's very, very tough. You know, George Clooney talking about his meeting with him, you know, at that fundraiser. Yeah, that is what everybody who has met with him in the last few months has attested to, including George Stephanopoulos in, you know, those off the cuff comments. You know, I'm dragging on the Georges here, but it's a tough time. But Joe Biden's going to have to come to it himself, and I think he will.
Well, I'll tell you what, I have been wondering for days, almost 2 weeks now, what Jeannie Shanzano was going to say, and there you have it. Jeannie and Rick are saying the same thing. And so, Rick, when we talk about how do you convince Joe Biden or how does this thing come to an end, you've run presidential campaigns. Doesn't it come down to money? Politico is reporting today now, according to a person with direct knowledge of internal campaign data, they are projecting grassroots fundraising, small dollar fundraising, will drop at least 25% the rest of the month. And now you've got union leaders, Sarah Nelson at the flight attendants, Sean Fain at the UAW, the great friend of Joe Biden, expressing deep concern in a closed-door meeting that they have not seen a path to victory from this campaign. When these sources dry up, that's undeniable, isn't it?
Yeah, it's really much more about that path to victory that you just mentioned than it is about money. There's not a candidate that I've ever worked with who doesn't think they can overcome a financial disadvantage, and so that's an awful hard sell to make it about a money thing. But they are all compelled to be realistic about a path to victory. How are we going to win this election, and is it really necessary to put the party and your supporters and your family through a march to failure? And those are the conversations that are going on. We've always said in the past, looking at the data and how this country is set up in such a divided way, that Biden could beat Trump, regardless of all the ups and downs we've seen in this campaign, but that he hasn't been on that path to victory, you know, but that the numbers told us that there was a way to do it. And right now, I think from what I've seen of the public polling, I'd be hard-pressed to find that path to victory again in the surveys. And so if there's no path, what's the point? And there is plenty of time for the Democratic Party to restructure the ticket between now and Chicago and have what would be a successful transition. But every single day, the clock is ticking on that, and it makes it harder to do, both accumulating the financial resources needed to prosecute a campaign, but also to turn back the damage that's already been done in the state polling, where all these states have got to be able to be competitive.
Just getting to our final minute here, Jeannie, is the president, just by the nature of this job, too insulated, too much in the bubble to hear this conversation, or does he just not believe it?
You know, I don't think he believes it. And you know, anybody who has run and won the presidency, they have done something none of us have done. And he keeps saying he's right. He has beaten Donald Trump. Nobody else has. And so I think for him to hear this is awfully tough. But I do think that that's why people he respects, people he is close to, beginning with family, are the ones who are going to need to help him come to the decision that's best for him, for his legacy, but most important for the party and the country as a whole. And that would be his wife, that would be his children, his grandchildren, and the staff that he trusts and has been with for so long. I mean, his service has been enormously important. He has done far better than most people could have believed in this really difficult time from COVID to now. But the reality is, people don't believe he's up to the challenge, and it's going to be difficult to convince them otherwise. And that makes this a risky move for him to continue.
The two voices you trust on this program, Rick Davis and Jeannie Shanzano, back together. Our signature panel will be back again in our second hour with more, as we also look forward to a conversation with Amos Hochstein, the president's senior advisor on energy, will join us on this CPI day at the top of our second hour. The news conference will be live tonight on Bloomberg TV and radio.
politics to the world of business. This is Balance of Power. Live from Washington, D.C.
The chorus calling on Joe Biden to drop out of the race gets louder. Welcome to the fastest show in politics. As more Democrats make the call now, even as Joe Biden prepares for his biggest test yet. I'm Joe Matthew alongside Kaylee Lines, live from Washington. And Kaylee, we're about 5 hours away from the news conference that I refer to here. At the conclusion of NATO, the world will be watching with more calls from Democrats for Joe Biden to drop out.
Yeah, 6:30 p.m. Eastern time is when President Biden will take the podium. And it is hard to overstate how crucial this moment is going to be for him, as he has proven to have great difficulty with stopping the bleeding within his own party in terms of the calls for him to drop out. As you say, Joe, we now have a Democratic senator, the first in the senator from Vermont, Peter Welch, to drop out. 2 more members of the House. That tally is now at 10 House Democrats who have called for him to step out. And who knows what will happen after the press conference is over, after Speaker Emerita Nancy Pelosi essentially encouraged members on television yesterday to at least hold off until NATO's over.
In our first hour here, before we welcome to our Bloomberg television audience 2 salvos from the New York Times as well, Kaylee. One suggesting that the campaign is now running numbers on Kamala Harris versus Donald Trump. The other suggesting that close aides to the president are trying to build the argument that they will bring to him to convince him to drop out of this race. All 4 political analysts, Democrats and Republicans on the program in the last 60 minutes, all agreed that he will not make it to November as the Democratic nominee.
And it's incredible that we're having this conversation on a day in which you could have said there was great news for President Biden in the form of inflation data. With a cooler than expected CPI, you finally have those pressures easing, the economy perhaps heading more in the direction in which an incumbent president would want it. And yet age seems to be the factor more so than the economy right now, at least for voters and the chattering class here in Washington. But of course, the inflation number is crucial to Wall Street. So let's get a check on how markets are reacting to that data. Charlie Pellet is up in New York for us. Hey, Charlie.
Thank you very much, Kaylee Lyons. Lots of moving parts to this market on the CPI Thursday, and a lot of concerns about the age of this bull market. Right now, we got the S&P trading lower, retreating by 50, back below 5,600. S&P right now down 0.9%. Stocks hitting a big rotation today. The Dow holding on to a 9-point gain. Little change there. NASDAQ selling off big time, down 335 points now for the NASDAQ Composite Index. That is a drop right now of 1.8%. The big news, though, the Russell 2000 Index. Small cap shares surging, enjoying their best day of the year. The Russell 2000 up now by 3.2%. 10-year, 4.16%, with a 2-year yielding 4.49%. Spot gold up $39 the ounce to $24.10, up 1.6%. And West Texas Intermediate crude up 0.1%, 82.18 a barrel. Traders are cheering signs of disinflation, sending bond yields tumbling on bets that the Fed will be cutting rates soon. Again, the 10-year, 4.17%. Big news involving Tesla. The stock is down now by 6.8%. Sources tell Bloomberg Tesla is delaying its planned robo-taxi unveiling to October to allow teams to work on the project more time to build additional vehicle prototypes. Also, Bain Capital and Reverence Capital Partners have agreed on a deal to take Envestnet private. Envestnet shares, they're down now by 0.2%. So again, recapping here, S&P down 0.9%. The Dow little changed. NASDAQ down 1.9%. Big news for the Russell 2000, though, up 3.2%. Lots going on. Back we go to Washington. Balance of Power continues. Once again, your hosts, Joe Matthew and Kaylee Lyons.
Oh, Charlie Pellet, lots going on is an understatement if we're talking about what's going on here in Washington. As the NATO summit is wrapping up today, capped by an all-important press conference that Joe Biden is planning to hold at 6:30 p.m. Eastern time, on a day in which he could be celebrating the inflation data. Charlie was just running us through the market reaction. We got a statement from the White House, Biden celebrating the prices falling last month. In part, though, Joe, saying prices are still too high.
Yeah.
The thing is, I wonder for American voters now, if it is so much that prices are high or that Biden's age is also high. And that really is what the question is now.
Yes. Are prices too high or the age? Well, that's, I guess, a real question here. Look, even the Russell's up today. This is the day, you're right, that Joe Biden has been waiting for, and no one's paying attention, at least in that regard, because it's all about this news conference at 6:30, assuming it starts at 6:30. But boy, Kaylee, we're hearing from Democrats straight through the day today here on Bloomberg who say that it doesn't matter. It's not the test. Good luck with the news conference, but we're moving on here. And that's something that we're going to be discussing for the next hour beginning with Michelle Jamrisco, Bloomberg's White House correspondent, is with us at the table right now on a very important day. Michelle, you specialize in geopolitics. This is your week, and no one's talking about it.
And yet we're so focused on things
there's
like
one
the
story
age.
in
Yes,
Washington.
that's absolutely right. And I think you'll see from Biden tonight that he desperately wants to redirect the conversation to his strengths, to foreign policy, to what he thinks are successes on the NATO front, on getting Ukraine the support and funding that it needs, even though it's still bogged down in war there. And with this ever so slight ceasefire optimism that we heard from Jake Sullivan earlier today as well. So I think he'll probably try to round out all those themes, as well as add a little bit of perhaps Indo-Pacific flavor from my focus of the world, as he meets with some of those allies as well, and kind of try to round it out in a case for preserving democracy, importance of allies, celebrating, of course, the NATO anniversary, but also I'm better than that other guy who wants to take those things away. So we'll see how that case lands. But yes, huge press conference tonight.
Yeah, I mean, we've been talking about this as kind of a make or break week for
sure.
President Biden. This is the second chance after he gave a teleprompted speech at the beginning of the NATO summit on Tuesday. I guess my question is, Michelle, do we have a sense that ultimately this makes a difference? Even if his performance is perfect tonight, has too much damage already been done when you have had a laundry list of members of his own party coming out and say you can't beat Donald Trump?
Yeah, it's hard to say. I mean, I think you have to look at it on two different fronts. I mean, of course, we're talking all day about the folks on the Hill and the slow but steady drumbeat of people saying, hey, you should maybe rethink this. And George Clooney, of course, the donor field. But then also, if you take away the sort of elites, as maybe Biden would call them, and look at the voters, I mean, the polls are telling a little bit of a different story as well. I mean, I think tonight is the second big opportunity, maybe the first big opportunity since the debate, to really kind of show the American public, to the broader viewership in the U.S., how is he fit? Is he demonstrating more mental acuity than that debate, of course, but also than people maybe expect he would show in the months to come and perhaps years to come if he's reelected. And so I think that is, the stakes are still high from that standpoint, but maybe it won't change anybody's minds, perhaps again on the Hill, who are already thinking, hey, maybe you should drop out, and can you listen to me privately if you don't need me to go public and talk about this on social media.
You said something in the outset that would be a lead story in any other world where this wouldn't be happening, and that's the potential for a ceasefire to be announced. Jake Sullivan talking about this earlier. What did we learn?
Yeah, they kind of reiterated a bit of the language that they have in recent weeks in terms of getting a sort of framework in place, confirmed that Hamas has kind of gone further in supporting this original proposal that was, weeks ago set out, that U.S. said Israel supported, and then Israel kind of backed off, and now they're looking at this again now that Hamas has said that they're okay with this idea. So we don't know all the details yet. We did hear from Jake Sullivan that there is a little bit of a sense of more optimism, but again, he's making clear we're not there yet. We don't.
Won't be announced
if we close, we could be far from it, but these are encouraging signs, I think, and more positive, he said, than in months. So that is a development there. But of course, that would be a nice story for them to play up on a day when everybody's focused on this age issue again.
Absolutely. Michelle Jamrisco, White House correspondent for us here at Bloomberg. Thank you so much. We want to dig further into that optimism around a ceasefire potentially and go to someone within the administration who has been involved extensively in the Middle East in recent weeks. Amos Hochstein is joining us now from the White House North Lawn. He is Senior Advisor to the President for Energy and Investment. Welcome back to Bloomberg, sir. Always great to have you. Could you just give us your take, given you have spent time in the region recently, about what kind of moment we're in, if it is a moment that deserves more optimism after we've had some, shall we say, head fakes recently?
Well, first, it's good to be back with you. I don't know about head fake. I think we're always hoping that we can move towards a ceasefire that brings home hostages and de-escalates everything that's happening in the Middle East. But no doubt, as you mentioned before, Jake Sullivan already said this morning, we're in a better place than we were in a long time, and the opportunity for an agreement is within reach, and hope that we can get there. I think that that we're putting everything we can. The president has personally tried to make sure that all of us are not leaving any stone unturned and trying to work as hard as possible. My colleagues are in the region right now. I was in the region just a few days ago, and we'll continue to do everything we can under the president's direction to try to get this deal done. It's critical for all the Israelis, for Palestinians, Lebanese, and for the region.
Almost, it's great to have you back. Can I ask you just quickly, do you have plans in the immediate future to return to the region?
Look, I'm always evaluating what makes the most sense. Regardless of my travel to the region, we're in touch with the leadership in all countries. So I wouldn't draw too many conclusions from I have gone or haven't gone, but I evaluate that almost on a daily basis in consultation with Jake and Tony Blinken and the president. And ultimately the president.
You know the world is watching your travel schedule. Your travel schedule is meaningful, but I do want to ask you about this against the backdrop of energy prices, because we've had analysts on referring to the potential for black swan events, and they frequently point to the Middle East. Yet here we are, with the average gas price, according to AAA, at $3.54, somehow to the penny where we were a year ago. And our CPI data this morning shows gasoline prices down almost 4% in June. Can Americans expect this trend to continue?
Well, let me address that, because I think you said it right. Analysts are always coming up with, the reasons why the black swan, or calling for headline-grabbing projections. This whole year, I've heard about we're about to go to $100 oil. We're going to go to $4 gasoline. I've heard it multiple times. The president has given me direction to try to do everything we can to make sure that supplies are steady, secure, and affordable here in the United States, both on crude and gasoline and natural gas. And so, as you said, last year we're the same prices we are now when that was without the war in the Middle East. So we have worked to maintain a balanced price and to make sure that the American economy is not hampered by higher prices, and that American consumers, especially in the summer. So I think we're going to continue to see that trend to try to bring prices down. And look, this is something that has been very important to the president for the last 3 years. He has talked to me about this on a regular basis. That hasn't stopped. He wants to see these prices come down as much as possible. And I think, as you said, look, the CPI prices today, the CPI out today, and showing that gasoline prices are lower, means more pennies and dollars in people's pockets to be able to spend on other things, especially this summer.
In those conversations that you have with the president, Amos, to what extent has he talked about the Strategic Petroleum Reserve, and if his end goal is to have prices be as low as possible? Is he pushing at all for another tapping of that?
Look, you have to put this in context. The president when he made the decision, which was not everybody in the industry expected at the time, but he made the decision into the Russian invasion to Ukraine to not only tap the SPR, but to do it in a substantial way, more than anything that we've ever done in America before. 180 million barrels out of the SPR over a period of 6 months. That was a very bold move that he took responsibility for, made the decision, instructed us to do. And I think that if the situation warrants, we will consider doing it again. But again, we have to look at, it's not just about price, it's about what's happening around the world and where are we in hurricane season. We just had a potential for a bad hurricane, that, one of the earliest Category 5 hurricanes, but we did not suffer an energy shortage, but we were well prepared for it. And we're going to continue to evaluate it based on what's happening in the Middle East, what's happening in Russia and Ukraine, and what's happening weather-wise here in the U.S. But we have an SPR. He has made sure for 9 months, he has told me directly over and over again, make sure that we have the tools to be able to use if we have the need to do that.
As we look at these gas prices heading lower then, and again down 3.8% in June, I already mentioned the national average. Is that because of the 1 million barrels of gasoline you released from the Northeast Reserve? Or was that something that didn't need to happen?
No, first of all, it did need to happen. At some point, Congress also participated in that decision. But the timing of it was what was important. So I do think that it played an important role in it in a certain regions of the country, as we predicted last week when folks thought that we would see a rise in gasoline prices around July. If you go back to the same analysts from a month ago, and we were able to stem the rise in gasoline prices and in oil prices In fact, we've seen oil decline over the last several days when it sort of tempted some higher prices. But I'll tell you, there's been a lot of questions about how things are working here in the White House. I will tell you, I have seen the president super engaged on this issue throughout this presidency, and with no change to that over the last several days and weeks.
Okay, so Amos, he is still engaged. Obviously, you work very closely with him as a senior advisor. There have been a number of cabinet officials and others who have testified on Capitol Hill in recent days, asked by lawmakers, and if their meetings with Biden, they have seen any apparent decline. With the frequency with which you talk to the president, have you seen any indication that his 81 years have caught up with him in a more material way?
Look, I think the president said himself he doesn't walk as fast as he has before, but I can tell you this. When it comes to running the country and to a large degree running the free world, he's the boss, he's in charge, and he's running the show, and he is very engaged on all these issues, and the calls are his. I have a unique opportunity to talk to him about both domestic policy when it comes to our energy policy here at home, infrastructure, but also about international issues. We talked earlier in this interview about Lebanon and the complexity of the Israel-Lebanon situation and conflict and the potential for a more regional conflict as a result. I was with him at the G7 just last week. We've discussed a lot of issues around Africa and competition with China, on AI, and on all those issues. He is in command and I have not seen any reason to have any concern. He is as engaged as he's ever been. And look, I've known him a long time. I worked for him when he was the vice president. I've worked with him now as president. I knew him when he was the chairman of the Foreign Relations Committee. And I can tell you, we all have to deal with age. But when it comes to the substance of the issues and managing the day-to-day, there is no doubts in my mind. Sometimes I wish he let me go a little further without him telling me exactly what he thinks on every issue, but he is very, very engaged.
Well, considering someone with such a broad portfolio, as you referenced here, Amos, in our remaining moment, how often do you get a chance to meet with the president? Do you have a regular appointment? How often do you meet with him? When's the last time you saw him?
Well, I saw him yesterday, and again, I was with him for several days when we traveled to the G7. I see him whenever the need arises, I can tell you I've had to take phone calls on all times of the day, the evening, and over the weekends on any question that he has. I'm on the phone frequently with him if he has a question or if he has a directive. And so everything I'm telling you is from my direct relationship with him on a regular basis.
Amos, it's great to have you back. Thank you for joining us from a steamy North Lawn at the White House. Amos Hochstein, Senior Advisor to the President for Energy and Investment. Kaylee, that is the word from one of the closest advisors to Joe Biden as we wait for the news conference tonight.
Yeah, Joe Biden, in Amos's words, is the boss and very engaged. We'll see how engaged he is later on. We'll bring that to you live on Bloomberg TV and radio.
1:21 on Wall Street. We do check markets all day long here at Bloomberg. We have got a decidedly mixed U.S. stock market today with a major rotation underway. Right to the numbers here. They tell the story. We've got the Dow up 45, gain there of 0.1%, but the S&P down 0.8%, down 45, and NASDAQ slumping 320 points, down 1.7%. The Russell 2000 index of small cap shares having its best day of the year, up by 3.4%. Optimism over lower rates sparking a shift into riskier corners. The 10-year 4.18%, the 2-year 4.49%. Gold now up $42 the ounce to $24.13, up 1.8%. And West Texas Intermediate crude up 0.5%. WTI right now $82.50 a barrel for crude. Bitcoin meanwhile at 57,851, up by about 0.8%. Airline stocks moving lower for the most part following Delta's earnings this morning. Delta shares now down by 5.1%. Among some of the other carriers, we've got United UAL down 3.8%, American down 4.7%, Southwest down 2.4%, but JetBlue just turning around, up now by 0.3%. Again, recapping here, S&P trading lower by 0.8%, Russell 2000 worth repeating, up now by 3.4%, and on the CPI Thursday, the 10-year at 4.18%. Balance of power continues now. Back we go to Washington. Once again, your hosts, Joe Matthew and Kaylee Lyons.
All right, Charlie Pellet, it may be CPI Thursday in New York, and it is here in Washington as well, but it is also Joe Biden press conference day at a critical moment for not just his presidency amid the NATO summit, but of course his re-election campaign, as all eyes will be on his performance later this evening at 6:30 p.m. Eastern time. And ahead of that, a few of his top campaign aides have been dispatched to Capitol Hill, meeting still with Senate Democrats to try to stop the bleeding within the party, as one Democratic member of that caucus, Senator Peter Welch of Vermont, has called for him to drop out, along with 10 members now of House Democrats. But when the House Democratic leader was asked about this in a news conference on Capitol Hill earlier today, this is what he said.
House Democrats are engaged in conversations with House Democrats at this moment in time. Those conversations have been candid, clear-eyed, and comprehensive. And that's important for us to do as a House Democratic Caucus family. And as long as those conversations are ongoing, I'm going to respect the sanctity of those conversations until we conclude that process.
So good alliteration, but no consensus. That also starts with a C. Hakeem Jeffries there apparently waiting for the rank and file. Sounding a little bit like Nancy Pelosi a little bit yesterday on MSNBC, Kaylee, when she said that she's waiting for the president to make his decision, even though he thought he had already.
Yeah, quite telling.
And so the wait goes on. There are reports today that there are other Democratic lawmakers intending to call on the president to drop out, but they're waiting for world leaders to leave the city. This is the final day of the NATO summit. So tomorrow could be a heck of a day as we assemble our panel. Rick Davis and Jeannie Shanzano are back. I can't remember how long it's been. Our signature panel back in place today, Bloomberg Politics contributors, and great to see you both on Bloomberg TV and radio. Jeannie, is there anything that Joe Biden can do tonight? I know it's his job. He's got to do this news conference. But to change the minds of the Democrats we're talking about?
I don't think he's going to be able to change minds of people who have come out certainly publicly and called for him to step down. Although we should be mindful that almost to a person, everyone who called for him to step down said if he chooses to go forward, they would support him, of course. But, you know, the difficulty here is that it's very tough for Joe Biden in terms of the performance tonight. He's going to be watched. Any little slip up, any little gaffe, any little non sequitur is going to be fodder for people to talk about. And so I'm not convinced there's a lot he can do. But, you know, on that clip you played of Hakeem Jeffries, we can't underestimate how important Hakeem Jeffries is to this conversation. He really is like holding up a dam. If he was to break, I think we would see that many of the Democrats follow. He's a young, exciting, Black, 5 steps away from speakership in New York, which people are now calling a swing state in this election cycle. He doesn't know Biden well, but if he was to tell Biden that he has lost support in the House, that would be incredibly meaningful. But of course, as you just played, he hasn't said that quite yet.
Yeah, I guess time will tell. Of course, we're also waiting to see what else comes out of the Senate after the meeting with a number of senators and Biden campaign aides that we understand is ongoing. But one member of the ranks, Senator Peter Welch, as I mentioned, has come out writing in an op-ed in the Washington Post, Biden should withdraw for the good of the country. In part, Rick, he says, we cannot unsee President Biden's disastrous debate performance. We cannot ignore or dismiss the valid questions raised since that night. So I guess to the point Jeannie was making, Rick, can this night, tonight, make a difference when June 27th already happened?
I think it can soften the landing, but it doesn't change the outcome. I think it's almost baked into the equation right now. The Democrats are wrestling with how do you make the transition from Biden and who you transition to, rather than the question of support Biden or don't support Biden. And so I think that he needs to do his job tonight. He needs to actually be a good president of the United States, right? He needs to show that we're the leader of a free Europe, that our support for NATO is non-compromisable, that our efforts to help Ukraine will go on no matter what happens in the next election, that freedom doesn't have a term of office. And he has to do that no matter what, right? It's got nothing to do with his reelection. That's his job. Do your job. Does that help a little bit, down the road? Sure. Yeah, absolutely. But more importantly, this is the problem with being an incumbent president running for reelection, is you have an obligation to our country and the rest of the world to project strength and promote freedom and democracy, and that's his job to do tonight. And he has really got to forget the fact that he's a candidate for president and is worried about every little misstep and miscue. Because at the end of the day, we're paying him to do a job today, and this is probably one of the most important events that will occur in his presidency, between now and Election Day. And so be a good president, do a good job. That being said, probably the outcome is not dependent upon what he does tonight. So he should feel free, to lean in on this and realize that nothing bad can happen from tonight, because that's already happened since the debate.
Do your job, says Rick Davis. There was a vote in the House of Representatives today. Jeannie, this was the inherent contempt vote. It sounds like a movie. Against Merrick Garland, who refuses to release the Robert Hur special counsel tapes, the interview of Joe Biden that led the special counsel to refer to him as a forgetful old man. 204-210, Republicans did not get what they wanted here, but I wonder if it matters. There were thoughts that this would be a Joe Biden on this tape, forgetting the names of family members, major events in his life. They didn't want this to get out. But that was weeks ago, Jeannie. Does it even matter anymore?
I'm not sure how it matters at this point. I said to you a month or so ago, I didn't support the White House sticking to this. This should have been released. The reality is, to Senator Welch's point, we can't unsee what we saw during that debate, and people who were watching Joe Biden closely in the months before can't unsee what they have seen. And I think that is the problem he is facing. And while I agree with Rick, he needs to do his job tonight, the problem we all have as Americans is no matter what he says tonight, the focus is going to be on his age. Is he able to do his job? Less so on the important things he's saying and the question of his health and whether he is up to the task. And, Kaylee was talking about the inflation numbers. We aren't even talking about that publicly. It is all about Biden's age. This is a disaster for the Democratic Party. Inflation should be celebrated today. They can't do it because it's all about age. And so that's the problem we all have. And that's why he needs to think carefully about the issue of whether, in fact, he should stop standing in the way of progress moving forward and do the patriotic thing and remove himself from this.
Well, just to underscore the age issue, we got a new poll out from the Washington Post and ABC together with Ipsos that actually found Biden and Trump in a head-to-head contest for the popular vote, tied at 46%. But perhaps what is more telling when it comes to the age question, 85% of those polled said Biden is too old. Only 60% said that about Donald Trump, who, Rick, I would remind our listeners and viewers, is only 3 years younger than Joe Biden. If we're considering how the Republican about to become nominee in Milwaukee next week is viewing all of this, does he need Joe Biden to stay in this race?
Kayla, you make a really key point. I mean, because the focus is all on President Biden, we've forgotten the disastrous candidacy of Donald Trump. Yes, over half the population believes that he's too old to be president of the United States and are hesitant to vote for him for that reason. 2, he's a convicted felon 34 times over. 3, he says the most outrageous, non-American things you could ever say from the platform of his stages of the events that he runs on. I mean, like, let's just go through the disastrous Trump campaign, because if we were focused on him, it would be a completely different conversation. The problem is there's only so much bandwidth in anxiety that the American public or the media can handle at one time. And Joe Biden has bought the entire bandwidth. I mean, he's really owning the airwaves in the most unlikely and unfortunate way. But this is the reason in that poll that you still have them tied. Both of them are a disaster by American public point of view, and they yearn for an option, and in both cases. And so, yeah, at least there's a debate about whether or not that's going to happen on the Democratic side. Republicans would be much better off with a more neutral candidate running for president. We would beat Biden hands down in that kind of a contest. But we've put up the one person that Biden, even in his weakened condition, could actually be competitive with. And that's very much part of the story that's not being told.
All right, Rick Davis and Jeannie Shanzano, Bloomberg Politics contributors, always helping us to tell the story. They'll be back with us later on this evening as we bring you special coverage of President Biden's news conference and, of course, Balance of Power, the late edition at 5 p.m. First, though, let's get a check on world and national news, and we get that in our 99.1 newsroom here in Washington with Nancy Lyons. Hey, Nancy.
Thanks, Kaylee. President Biden will need a strong performance in his solo news conference scheduled for later today. The steady drumbeat of concern continues over his ability to serve if elected in November. Aides from the White House and his campaign have been meeting with Democratic senators today ahead of the news conference, hoping to allay their fears. Gun control advocates are raising the alarm after a Texas-based company called American Rounds started installing vending machines that sell ammunition in grocery stores. This is in Alabama, Oklahoma, and Texas. The company says the machines use an identification scanner and facial recognition software to verify age. Grant Majors is the company's CEO.
We feel like we have the safest and most secure, method of ammunition sales in the country. I've personally walked into stores and big box stores and found open boxes of ammunition just sitting there on the shelf.
Major says he has a waiting list of some 200 grocery stores that want to install the machines. Michael Bloomberg, the founder and majority owner of Bloomberg LP, is a donor to groups that support gun control, including Everytown for Gun Safety. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Nancy Lyons. This is Bloomberg.
140 on Wall Street. We do check markets all day long at Bloomberg. We have got the Dow holding on to a 16-point gain right now. Little changed, up less than 0.1%. Stocks are seeing a big rotation with the S&P now down by almost 1%, down 51 points, back below 5,600, 55.81 on the S&P. NASDAQ hard hit today, down 347 points, a drop right now of 1.9%. But the Russell 2000 index of small cap shares heading in the other direction, small caps up by 3.4%. That index on track for its best day for 2024. 10-year 4.19% with a 2-year that's yielding 4.50%. Gold up $42 the ounce, 24.13 up 1.8%. While West Texas Intermediate crude 82.46 a barrel. WTI right now up by about 0.4%. So again, we have got stocks trading mixed. The Dow trading higher, up by about 0.1%. S&P down 0.9. We've got NASDAQ right now down by about 1.9%. Pfizer is moving forward with a weight loss pill as the drug maker seeks to crack the multi-billion-dollar market for obesity medications and mount a comeback from its post-pandemic malaise. Pfizer says the once-daily treatment will progress to a mid-stage study in the second half of the year. Right now, we have got Pfizer shares trading higher by 1%. Among some of the companies out with earnings today, Delta Airlines, the stock being hard hit. Right now, we've got Delta down 5.5%. It says it expects profit this quarter to fall short of Wall Street expectations. Other airlines moving lower as well. Case in point, United down 4.2%. American Airlines lower now by 4.4%. Southwest down 2.8%. JetBlue, meanwhile, up 0.2%. So again, recapping, highly divergent market right now with the Dow up 0.1%, Russell 2000 up 3.4%, but the S&P down 0.9. Again, the 10-year 4.19%. Balance of power continues now. Back we go to Washington, and once again, your hosts, Joe Matthew and Kaylee Lyons.
All right, Charlie Pellet, thank you. Welcome to the fastest show in politics, the Thursday edition as we count down to Joe Biden's news conference. We're about 5 hours away at this point. At the conclusion of the NATO summit here in Washington, the commander-in-chief will hold forth. Some are framing this as the test of his political career. We spent the better half of this hour talking about that, but we want to look more at some of the policies that he's dealing with in town. Kaylee, the biggest, of course, Ukraine. It's the backdrop to this entire summit, with confusion in Europe following elections there and confusion about our own here. But Prime Minister Starmer talking today about allowing Ukraine to use UK-provided weapons in Russia, and that's a big part of the conversation in a bilateral meeting that's getting underway right now with Joe Biden.
Yeah, in fact, we've gotten some quotes out of that meeting. Joe Biden meeting with President of Ukraine, Volodymyr Zelensky, in part complimenting him for some of the successes Ukraine has seen in stopping Russia. One of the quotes from President Biden to President Zelensky: "You've imposed significant costs on Russia and made it clear Russia will not prevail in Ukraine." But of course, significant costs have also been inflicted on Ukraine in the years of this conflict. And that is where we want to have a wider conversation now. I'm pleased to say joining us here in our Washington, D.C. studio while she is in town for the NATO summit this week is Olga Rudneva. She is CEO of the Superhuman Center in Ukraine. Superhuman Center is a clinic for psychological assistance, prosthetics, reconstructive surgery, and rehabilitation for people affected by the war. Olga, welcome to Bloomberg. Thank you so much for joining us. I do want to get into the conversations you've had here during your time in Washington, what you are hearing, but I feel like first we should ask what you're really seeing on the ground in Ukraine. What do we need to know about conditions?
First of all, thank you very much for having me, and thank you for all support Ukraine have from the American people. You know, we definitely proved the world that we can win this war, but we can't win this war without external support. You know, being 2 years into the war, we are quite exhausted as a country with our resources going, down. So we definitely need external support, and America is playing a huge part in our victory. So what is happening in Ukraine? We have electricity for 4 hours per day. We can't use our air conditioning. We are in blackouts constantly because most of our, infrastructure is ruined. On Monday, we had a huge attack on a kids' hospital and on maternity house. So a lot of doctors killed, and it's a civilian infrastructure. Every night we go to bed and we don't know whether we're gonna wake up, and it's like 2-3 air sirens, drones and rockets flying over my country. We don't have enough air defense, and we have a lot of people who are injured, civilians and military personnel in the healthcare system. All our civilian hospitals, they work as military hospitals. And we still have people who are injured at the first day of the war, and new people are coming on a daily basis. So it's a huge and big war, and we are still standing against the enemy.
Well, Olga, you're doing God's work at the Superhuman Center, and you deserve thanks for everything that you're doing, and we want to make that clear. As you join us here in Washington, what is the most common injury that you see?
Well, we have a lot of amputations. 50,000 people in Ukraine lost their limbs, and it's double, triple amputations. And it's caused by the fact that Russians are targeting our medics first. They want to kill as many medicals as possible so they can't save lives. They don't let us to pick up injured people, so they continue shelling. So our injured people are staying at the battlefield for 2-3 hours.
Wow.
And the average time of evacuation is 5 to 6 hours. So if you put a tourniquet high, by the time you arrive at the hospital, we cut person high.
Oh my God.
So we see a lot of complex injuries, complex amputations. It's double, triple amputations. A lot of people with double amputation of upper limbs. It's minimal mobility. These guys, they go to the toilet with their wives because they can do anything. So it's 50,000 people who lost their limbs, and that's people who are our clients, our superhumans, as we call them. We provide them with psychological support, prosthetics, rehabilitation, and reintegration. It's very important to give a new reason to this person, a new role in life, because they can't do what they've done before they went to the military. And it's very important to help them open their business or, start a new life. And recently we opened reconstructive surgery department. We basically return people that are lost faces. It's people with disfigured faces, and it's not only about aesthetics, it's about losing the function, like function of breathing, swallowing, eating, or speaking. So these surgeries are very long. They last for 15 hours and take 2-3 years to restore function and aesthetic of this person. So healthcare system of Ukraine really needs a lot of resources and support while our hospitals being shelled and destroyed by Russians.
Well, so to get into that, we have so much conversation here in Washington that to some extent feels almost removed from humanity. The fact that this is a war that is affecting real people, it focuses on battles over money and weapons. But when it comes to the resources you actually need to be able to take care of these people, whether it's physically or mentally, especially given the apparent willingness of Russia to attack that infrastructure, do you have what you need, or is that something that the U.S. and other NATO allies could provide more robustly?
We definitely don't have enough resources. And when I'm talking resources, I'm talking about human resources. We are inviting doctors from all over the world, prosthetists for upper limbs, to come over in Ukraine and work in multinational teams to help us, great surgeons. So it's a human resources. We don't have enough people working in Ukraine providing medical assistance. Number two, we do need additional resources to provide people with prostheses. And we need to provide people with prostheses as soon as possible, because the longer people stay in wheelchairs, the less chances they'll be walking or having an active life. So we also need additional resources to train physiotherapists because we're going to have army of people who will need rehabilitation services. Right now, it's 1.8 million people in the front lines. By the end of the war, the estimation is up to 4 million. All of these people will need rehabilitation services because they were sleeping in the trenches, they were carrying 30 kilograms plus, malnutrition and other things. So it's a huge need for Ukraine to provide help. And I'm not only talking about military personnel. Our youngest patient is 11 years old. He lost his leg in Kharkiv. And our oldest patient is 78. She lost her leg during the shelling in Bakhmut. So it's all kind of people, civilians who just lived their normal life at their houses, had dreams, had plans, and one day it all was stopped by the Russian invasion. And they didn't do anything wrong. They just wanted to speak their language, to have their dreams, travel, go to school. That's it. We didn't do anything wrong as a country.
You left the Superhuman Center to be here in Washington, traveled halfway around the world. Has it been productive?
Yeah, we had meeting with congressmen and we were thanking them for support because we want to be able to finish the war without external support. As I mentioned already, the sooner we finish the war, the sooner we can start reconstructing the country. But not too many people know 40% of Ukrainian territory is mined. It's the size of Austria, meaning that if the war stops tomorrow, we will still have people who are losing their limbs or have disfigured faces or have other traumas. So we need to finish this war as soon as possible because every day of this war is taking the best people of Ukraine who volunteered to go and fight for this country. The sooner we finish the war, we start another war with our mental trauma, with our physical trauma, and restoring the country and going back to normal.
Well, I suspect this is going to be the work for the rest of your career, Olga. We're delighted to meet you and appreciate your insights today. Thank you for coming to see us.
Thank you very much for inviting.
She's on her way to Capitol Hill for more meetings with lawmakers. Olga Rudneva, CEO of the Superhuman Center in Ukraine, in a special conversation today on Bloomberg that you won't hear anywhere else. I'm Joe Matthew alongside Kaylee Lyons in Washington, where the president will be holding forth hours from now in a news conference that will bring this NATO summit to a conclusion. Of course, the matter of Ukraine has loomed large at this summit, and I suspect there will be some questions to the president. Certainly in his opening remarks, we'll hear about his meeting today with President Zelensky underway now at the White House. But for most, they'll be watching his performance with questions about his age and acuity. And for a little more on that, we bring in Saleha Mohsen, the host of the Big Take DC podcast here at Bloomberg. Saleha, what are you going to be watching for tonight? And I ask you that having heard from political analysts, D's and R's, over the course of this program, all of whom said it's already too late.
It's exactly what you just said, Joe. We are looking at Biden's performance, not his words. And that is really revealing that in a huge press conference where he is summarizing and sending a message to the world after he met with 31 close allies while there is a war in Europe ongoing that is running amok, out of control. People don't care what he has to say, what the substance of his words are. It's all about, can he perform? And you're right. For some people, maybe it's too late.
Well, so there's the question of whether what Biden says ultimately makes a difference to voters, more so perhaps the way he says it. But what can be said to Biden that would make a difference for the president? Do we have an understanding of who ultimately are the voices he's going to listen to? We know closely, of course, his wife, the First Lady, Jill Biden. But as we have questions about the support of, say, Nancy Pelosi or other leaders in Congress, of donors like George Clooney, Saleha, who are the dissenters that ultimately could be the ones to make the largest difference here?
That's been really interesting to watch as this has developed, Kaylee. The inner sanctum, which is very few people, includes congressional Democratic leadership, so Chuck Schumer, Nancy Pelosi, Hakeem Jeffries, because of his position now, and yes, like you said, the First Lady, Jill Biden, and his sister, Valerie Biden, and a cadre of maybe 3 or 5 more close advisors who have been with him for decades or many, many years inside the White House right now, who are really there to listen and support him. And the message, what is going around that inner sanctum, has been tight-knit. What we know is what Nancy Pelosi said, and we, as a reporter in Washington, I know she speaks very, very carefully, so she did not directly endorse Biden running for a second term. That is really saying something. She went out there to say, hey, he needs to decide, and while we have foreign allies in town, in the Capitol, at the White House, let's keep this problem in the family. She was admonishing and cautioning her Democratic colleagues, don't spill out into the public sphere, wait till the NATO summit is over. So I expect tomorrow and through the weekend, we're going to hear a lot more from those people who did heed Pelosi's words and decided to wait until the NATO summit was over before they spoke out.
Saleha Mohsen, the Big Take DC podcast drops today in the midst of a stormy week in Washington. Saleha, it's great to have you back. And Kaylee, we're going to do this all over again a little bit later on. 5 p.m. Eastern time is the late edition of Balance of Power, but we're going into overtime. It looks like the White House has delayed the president's news conference to 6:30, or rescheduled, I should say. I'm sure there's a lot happening here with 31 world leaders to balance and a bilateral with the president of Ukraine. But look, things tend to run late, and we'll be in for the duration.
Yep, we're in it for the long haul. we will basically be playing straight through from 5 p.m. onwards,
whenever it's
because
done.
this is a critical moment in Joe Biden's presidency and, of course, his re-election campaign. It remains to be seen whether that re-election effort will continue beyond the coming days, Joe. It all depends on how he's able to perform tonight.
We're going to find out together. Meet us back here at 5 o'clock. The news conference at 6:30, only here on Bloomberg, as we prepare for Bloomberg Business Week. It's coming up next. Tim and Carol at the Bloomberg Green Festival in Seattle. We'll see you back here in a few hours on Bloomberg TV and radio.
is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine, plus global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenevec on Bloomberg Radio.
Afternoon, everyone. We are live in Seattle from the Bloomberg Green Festival. It's day 2 of our coverage here. Welcome to our audiences on Bloomberg TV, Bloomberg Radio, on YouTube, and at Bloomberg Originals. Joining us on this Thursday, July 11th, 2024, I'm Tim Stenevec. My co-host, Carol Masser, She's going to be along shortly with her panel live from the event here in Seattle with Sue Bird, WNBA legend, also the co-founder of Together and A Touch More, also with Amazon Chief Sustainability Officer Kara Hurst. We got a great program coming up. In just a few minutes, we're going to hear all about investing in climate technology with TPG Executive Chairman Jim Coulter. He's going to be joining Bloomberg's Jason Kelly. We're also going to be joined by Ryan Spies, Managing Director of Sustainability over at Alaska Airlines. We're going to talk all about what the airline industry is doing and how much more they need to do when it comes to sustainability. Also, a little later in our program, we're joined by Gina McCarthy, former U.S. EPA Administrator and the first White House National Climate Advisor on partnership, leadership, and the right discussions around climate initiatives. Let's get on over to Charlie Pellet for a market update, because, Charlie, we got a little sell-off happening right now.
Indeed. Actually, Tim, it all depends on where you're looking in this market. Yes, absolutely true, looking at a sell-off for the S&P 500 index, but guess what? The Russell 2000 index enjoying its best day of the year. A major rotation underway, that perhaps the afternoon theme for the equity market. Let me begin with the Russell 2000, up now by 3.4%. The Dow holding on to a gain of 0.1%, up 55, but absolutely correct. A sell-off for the S&P 500 index, down 55 now, a drop there of 1%. And also, we are now looking at a drop for the NASDAQ Composite Index, just about the worst level of the day. We got NASDAQ down by almost 400 points, a drop right now of 2.1%. Traders are betting that the Federal Reserve will be able to cut rates soon. That's sending bond yields tumbling while driving a strong stock market rotation. That Russell 2000, worth repeating, up now by 3.4%. Your 10-year, 4.19%. Your 2-year, 4.50%. Gold up 1.8%, 24.14 the ounce. And West Texas Intermediate crude up 0.6%, 82.58 a barrel. Sources tell Bloomberg Tesla is delaying its planned robo-taxi unveiling to October to allow teams to work on the project so they can have more time to build additional vehicle prototypes. Tesla shares hard hit today. We got Tesla part of that broad tech sell-off. Tesla down now by 7.8%. So again, repeating here, a decidedly mixed U.S. stock market. Yes, lower on the S&P, down 1%, but that Russell 2000 certainly bears repeating, up now by 3.4%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
Hey, thank you so much for that update, Charlie Pellet. Tim Stanavec live here at the Bloomberg Green Festival in Seattle, day 2 of our coverage. In just a minute, we're going to head on over to the main stage where Jason Kelly is standing by with Jim Coulter, TPG founding partner and a managing partner of TPG Rise Climate. They're going to talk investing in climate technology. A little later in our program, we're going to be speaking with the Managing Director of Sustainability over at Alaska Airlines. Right now, though, let's go to the main stage here in Seattle, where we find Bloomberg correspondent Jason Kelly with Jim Coulter of TPG.
On this business, on investing in climate. 1,400 companies. You guys have presence in 50 countries, I believe. I want to have a wide-ranging conversation. I know you have some things to share with us, but I want to start by asking you, what's the biggest surprise? This was a massive bet in a lot of ways. Maybe the biggest bet you've made in your career. What have you learned?
I've learned that approaching climate change, you have to think of it as two sides of a coin. For years, since Keeling in the 60s, we've been focused on the need side. We have a problem to solve. But the other side of the coin is actually the opportunity. We're about to undertake a $120 trillion reindustrialization of the world, and that need and that opportunity need to move together. The money can't come from governments. No coalition of NGOs can get it done. Unless we can get the money moving in a capitalist system, we can't solve the problem. So this idea of putting the need and the opportunity together has been more challenging than I expected.
All right, so one of your signature moves as an investor over the past 40 years has been every year you get together with your investors and you